Your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show.
We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance. We're talking about it.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets. So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
Well, Lufthansa is leading airline and travel stocks higher this morning. It comes as crude oil hit its lowest level in more than 2 weeks. On optimism, the war in Iran could be coming to an end soon. Let's bring in Danny Lee, our aviation and transport reporter. And of course, many stocks are actually closed for trade because of the UK bank holiday. But ultimately, we walked in this morning, oil prices are lower. Clearly, that's a bit of a boon to the airline industry. How long is it going to take, Danny, for these, months-long disruption to unwind in the industry?
Well, I think the immediate term is this positivity around this potential ceasefire, this 60-day extension. Of course, when it comes to the real-world supply chain, the nuts and bolts of getting, for example, jet fuel through, processed from oil to refined, it's going to take still some time, months, but I think there has been a quietening down of the worries of jet fuel shortages in the likes of Europe and in Asia to an extent. So with this positivity around this potential ceasefire and this reopening of the Strait of Hormuz, that has helped really lift airline stocks. Basically, every stock tracked by Bloomberg of every airline that's publicly traded is all up today. It's unsurprising. You've seen oil fall by as much as 6% on Brent to $97, West Texas down to 91. So there is a lot of lift here for the airline industry. But we have been here before. There's these potential deals, and it does remain to be seen if something like this does stick this time. So as indeed today and later into this week, as Marco Rubio said, watching very closely for if there is going to be some kind of framework at least to settle this ceasefire.
Okay, Bloomberg's Asia aviation and transport reporter Danny Lee. Danny, thank you for that update on the airlines industry. Staying with that story, at least with that sector and the aerospace industry, the dramatic turnaround at Rolls-Royce under Tufan Erginbilgic is seen as one of the great corporate overhauls in recent times. On the latest episode of Leaders with Lacqua, Francine asked him if he feels like he's carrying the weight of British industry when so many companies have spoken about exploring a listing in the US.
Yes, sometimes, because I think there's this discussions whether companies should move to the US market. I'm sure, Francine, you asked those questions. So actually demonstrating that you can be in this market. And frankly, after a point, it is never about you. You don't want to fail all the stakeholders, employees, investors, even government. Once you pass a stage, right? okay, you have a success. Now, make sure that is sustainable success and actually you can build on it.
What can other British companies learn from Rolls-Royce?
I mean, a lot. But business model level, are they actually set up to win? If not, fix the business model. And you do that, then of course you need to energize your employees. It's not about you. It is about 50,000 people. I am non-compromising for that. You may say blunt or whatever, but non-compromising. Mediocrity at that level kills the organizations, but also good people, then you need to develop them and have a great career in this.
How do you manage good people? What do they want?
Effectively, you want people in your organization who are highly marketable, but they want to stay with you, right?
Right.
So that's what
that's
you
a
want.
secret sauce.
Exactly.
Right.
That's what you want, right? That is almost 360 performance management in my mind. And 360 performance management always, if you want to close the circle, it finishes with reward and recognition. And then grow the company, because that creates all sorts of career opportunities. Shrinking companies, you have less opportunities. Grow the company, that actually feeds itself.
Right. I mean, every time I see you, we speak about small nuclear reactors.
Yes.
Because you it's not a 360 view. It's a very granular, it's almost problem solving. It's engineering.
I always go to big picture before I come to small picture. Europe cannot do without it. World needs it for net zero. Frankly, Europe needs it for supply security, full stop. Because even before geopolitics, Europe needed that. After some geopolitical events, frankly, Europe needs it more than that. So therefore, SMRs make sense at big picture because they are less risky, because smaller plants and manufacturing activity. Nuclear industry has a bad sort of experience with projects. They take longer, much more expensive. SMR, 85% manufacturing process. You learn. You learn, and it is modular, it is standard, rather than every nuclear project, bespoke EPC project in a way, right?
Anything could happen in the world of politics, as we've seen.
Yes.
Right. How do you deal with politics, with events outside your events? And even here, you could see a change in government with reform coming into power.
Yeah. I have a principle in business. I always tell people, once you get into trouble, it is too late. So you need to prepare the company before you get into trouble. So what does that mean? Like, we are actually living with it as we speak, and we last year we lived with tariff. But first of all, make the company very resilient. That was our drive. We did that. So external shocks, we actually deal with it a lot better. Mindset is more important than anything else. You need to have the mindset and the response capability in the company. You need to develop that before you are in trouble, because it takes some time, right? And then you need to be agile using that capability. And then last thing you are going to do, you are going to be action-oriented, not explanation-oriented.
But if you don't know what the trouble is, are you scenario planning for all the things that could change?
It's not about actually predicting the world. It is about how your company now thinks about dealing with external shocks, right? So that is the capability, the processes, the mindset. Like, we are now responding to current shocks. I can assure you, we couldn't do half of what we are doing 3 years ago. Probably 10%. Probably when I said something, people would look at me with blank eyes. What is he talking about? Today, I don't need to say a lot. I need to give the context, and people are in action.
And the full interview has a global release on Bloomberg TV later today at 10 p.m. UK time. All right, let's get a look on how markets are faring. We're about half an hour into the trading session. Of course, it is a UK bank holiday, but European markets are open, and the picture is positive. As you can see, Stoxx 600 is up 0.6%. We've got the DAX, the German index, up about 1%. The CAC 40 in France up a similar amount, but no surprise given the fall in the price of oil. We are seeing a decent outperformance in the airline industry. Autos also having good starts to the day. Construction as well. So a lot of the cyclicals within the European index are having a good start to the day and to the week, Tom.
OK, coming up, the Standard Chartered CEO's apology for his controversial comments on AI have failed to reassure labour bodies. We're going to discuss the future of work with Elena Simple, Professor of Computer Science at King's College London. That is next. This is Bloomberg.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at the front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a four-part journey as I explore the great quest for longevity. Only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is the opening trade. We are 30 minutes into today's session. Happy Monday, everyone. European stocks on the front foot on the back of expectations that maybe there will be a deal between the US and Iran. European futures then pointing, or at least European markets, are up 0.6%. The futures have been pointing to a slightly brighter session. Nonetheless, you do see those gains across the benchmark of 0.6%. On the sector-by-sector basis, just two sectors the last time I looked in negative territory. On the upside, you've got the likes of autos, construction, travel and leisure. So the auto sector is certainly lifting the DAX. That index over in Germany is up a full 1%. And you're seeing a similar picture over in France. The CAC 40 is up 86 points currently, up more than 1%. The UK, of course, closed for a bank holiday. Jemana, what are you looking at?
Yeah, well, here's what else you need to know this morning. Senior U.S. officials say the U.S. and Iran are closing in on a deal that would reopen the Strait of Hormuz, even as President Donald Trump insisted he would not rush into an agreement. Speaking in India, U.S. Secretary of State Marco Rubio said a deal may be reached today. Oil has fallen on increased optimism that an end to the war is in sight. The cause of an explosion at a mine in China's Shanxi province is under investigation. At least 82 people were killed in the blast on Friday. The accident has triggered a vast rescue operation involving hundreds of emergency workers and an intervention from President Xi Jinping and senior officials. State media say early investigations suggest serious violations at the privately run mine. Shares in Delivery Hero have surged above a €10 billion takeover offer by Uber as investors bet that a higher price will be required to close a deal. Uber's proposal offers no premium to the closing price Thursday, the day before Bloomberg News first reported the talks. Sources say DoorDash has expressed interest in Delivery Hero's Middle East business known as Talabat, but has yet to put in an offer.
Now, the chief executive of Standard Chartered spent much of last week, you may remember, doing damage control after he aired plans to replace some, quote, lower value human capital with AI. Despite a subsequent apology from Bill Winters, union leaders argue the comments expose a broader, worrying trend of banks treating workers as disposable cost-cutting targets. For more, we are joined by Eleanor Simple, Professor of Computer Science at King's College London. Eleanor, good morning. Thank you for joining us.
Good morning. Thanks for
having
having me.
Was Bill Winters simply saying the quiet part out loud with his comments? He's just pointing to a reality. Some workers, particularly in the banking space, will be replaced by AI. Is that one way that we could look at his comments?
It's one way to look at it, though a lot of the conversation has focused on the rather clumsy choice of words, and it's great that the CEO has apologized for that. Research at King's College London has shown that the financial sector is highly exposed to disruption from AI. So it's great that they are looking at this problem and are trying to address it. For me, what's more important is the question of productivity. How is productivity measured? Where do productivity gains go? We've done a public attitude survey recently in April, surveying both employers and workers. And we see lots of differences there when it comes to how employers see productivity and whether they've noticed any happening as they've introduced AI versus how workers perceive how their jobs on a day-to-day basis have changed. There is a huge discrepancy between how employers see AI and what they expect it to do to the daily jobs of their workers, and the marginal improvements or changes that workers see when they use AI.
OK, so to be clear, there's an expectation from executives and corporate leaders that they're going to be able to drive more efficiencies than maybe their teams are actually seeing. So there's a gap in terms of expectations versus reality.
Exactly. So you have the dashboards and the KPIs on one side. You have employers telling us that they feel pressure from investors, from shareholders, from senior management to introduce AI into the workforce. But actually what we're also seeing is that people are just putting AI buttons on every tool rather than thinking on how to redesign perhaps work organizations.
Have you done any work on AI taxes? And I know there's increasing talk about the potential to tax companies that lean more and more on artificial intelligence tools. But then you also have to think about the societal ramifications. If, to Tom's point, you are going to see displacement of a huge number of jobs, should there be some form of an institutionalized redistribution of wealth?
So I'm a computer scientist. I'm not going to talk about tax. But in the public attitude survey we have done, we have seen several trends, which I think are interesting. Both employers and workers and the general public seem to be very worried about the potential economic impact of AI. Close to a third of the public think that if this displacement happens too fast, we will see civil unrest. And both employers and workers seem to agree that the benefits from using AI in organizations is going to go mostly to big companies and shareholders rather than more widely to the society, as you were saying. So you have this distributional anxiety, and when people feel that the system is not working for them, you will have civil unrest potentially.
So what do you think are some of the key factors that governments need to think about when thinking and considering building a framework, guardrails around the rollout of artificial intelligence?
Yeah, so the public is telling us that they expect government to do something, and that something could be slowing down on innovation for them to have time to retrain or be more prepared for what is happening with AI in the workforce. From my own research, government should also consider using AI in public services in things that really matter, and measuring and monitoring the impacts of AI more widely. Employers in the surveys were worried and have experienced issues with AI in terms of biases, in terms of outcomes, in terms of accuracy. Now imagine now if AI is used to decide whether you're getting cancer treatment or whether your benefits are going to be lifted. You really want to make sure that when AI is used in these types of situations, that the government is looking out for its citizens, and they are purchasing the technology that is doing the right thing and is doing things fairly for society.
With your computer scientist hat on, in this moment where, when I speak to tech executives, they're talking about this pivot moment in terms of agentic use, they're talking about token use, being driven to consume as many tokens as possible, they're talking about the focus on inference versus training maybe. With that computer scientist hat on, which jobs in this new world order are most vulnerable? What is your current assessment? I know it's a question that evolves and it's an answer that evolves, but what is your current take as you have your finger on the pulse of this technology?
I think it's a very interesting question because the truthful answer is we don't know yet. I mean, we see some trends, but I think we lack a bit of imagination at the moment. We're in this moment where just like when the electric engine was introduced, all we're doing is trying to replace the steam engine with something a bit more powerful. Instead, what we should be doing is thinking about new products, new ways of doing things with AI, and we haven't done much of that yet. I think at the moment we may be building the wrong AI products, and we're also we're not building them in the right way or in the optimal way. Because, for instance, one thing we've seen in the survey is that there is a huge gender gap between how men and women, whether that's workers, students, parents, how they see and perceive AI and how they use them, how they engage with it. So if half the workforce is not engaging as much with the technology that we think is going to be disruptive, then what does that tell us about the type of AI tooling and capabilities that we have? Now, going back to what you were saying about inference, costs really matter. Now, a lot of the conversation is driven by consumer AI, by chatbots that everyone is using on a daily basis, as well as these types of AI buttons that I've been mentioning. It's good that people are experimenting. I think we're in an experimentation phase, but I think we need to do more work, more research as well, to understand what should we rely on people to do, right? So what is human judgment really useful for, most valuable for? What does this mean in terms of how do I design my work? If I think about what I'm doing on a day-to-day basis, yes, there will be some routine jobs like data entry, doing expenses, that are prone to automation. We all want our doctors and our social cares to spend less time writing minutes and summarizing notes and filling out forms, right? But what we also want is for teams to still be able to work together. We want for our reports and our research to be accurate. We want people to trust what experts tell them, or for people to trust institutions and the public services they engage with.
Yeah. Elena, fascinating discussion. Thank you so much for joining us today. Elena Simperi, Professor of Computer Science at King's College London. Now, coming up, the U.S. and Iran continue to work on a deal to reopen the Strait of Hormuz. So we'll get the latest on the oil markets next. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The death toll from the Ebola outbreak in the Democratic Republic of Congo may have surpassed 200. As local conflict and violence disrupt containment efforts, more than 900 suspected cases have been reported across 11 health zones spanning 3 eastern provinces. For more, our chief Africa correspondent and anchor, Jennifer Zawazaja, joined us right now. So would just walk us through the latest developments, what we know about the outbreak, and is the situation actually getting worse, Jen?
Well, Jumana, if we go by what we're hearing from the Africa CDC, they're calling the situation increasingly serious. So for many health officials over the past few days, over the weekend, it's seeming like we're seeing more and more coordination because there is more and more concern about this Bundibugyo strain of Ebola. Now, you were just mentioning there how we are seeing 11 health zones that are potentially affected. We're now seeing at least 10 African countries considered at risk due to this strain. And really, the epicenter of this has been, as you were mentioning there in the intro, the Democratic Republic of Congo, which is in itself facing an unstable region, mistrust by the public, and also strained health systems. That's complicating, and as the WHO puts it, impeding efforts to scale up Ebola contact tracing and identify infection. So as a result, we are seeing more coordination by a number of countries, not just in the region, but also across the continent and even globally, we should point out. So later today, what what we're waiting for is there is going to be convened an African high-level ministerial committee that's going to be meeting. It's not just ministers from the continent, I should point out. There's a number of leaders globally as well as from Europe that will be in attendance. So it's seeming like this is, again, becoming an issue of global health concern. And as a result, we are seeing more and more funding that is being deployed. But the countries that are that have been affected have requested about $319 million at this point.
Jen, there is no vaccine at this point for this particular strain. How are authorities on the ground responding? Do we expect this to become, if this isn't already a regional crisis, is that where things are heading? We're seeing some flights being cancelled. What are the potential broader contours of this?
Right now, Tom, if we just take a look at this regionally right now, we're hearing from health authorities that they're focusing really on enhanced education and also helping people to work with the communities, with some of their own traditions, and find ways around decreasing some of the transmission. You talked about some of the flights being canceled. Globally, we are seeing enhanced screening and surveillance. Over the weekend, we heard the U.S. State Department say that they're working with private companies and also international partners to expand testing capacity and explore some antiviral treatments for this Bundibugyo strain. But still, if we talk to aid groups that are fighting on the ground, we've done a bit of reporting on this ourselves here. They're still facing quite a lot of strain. They say they don't have the equipment that they need, such as face shields to protect health workers, testing kits, and also body bags, which of course are very important because Ebola is transmitted through a lot of bodily fluids. And so it's still quite a challenging situation on the ground, and we're seeing health authorities at least try to contain some of the spread regionally so that it doesn't become a global issue of concern.
Okay.
Jen, thank you so much. Jennifer Zabazaja, our Chief Africa Correspondent.
Let's switch focus right now and get a check on what is happening in terms of oil, because oil prices are down, but we are hearing comments now from the Iranian authorities. Of course, the key driver of market sentiment today has been expectations that maybe the US and Iran are inching closer to a deal. You're seeing Brent down 4.4%. Iran's foreign minister saying, at least foreign ministry spokesperson saying, that an agreement with the US is not imminent, but consensus was reached on many topics with the US. That's according to Tasnim news agency. Iran saying that consensus was reached on many topics with the US. We are also hearing from Iran's foreign ministry spokesman saying that an agreement with the US is not imminent, Jemana.
Sort of makes you wonder what the topics that they haven't agreed on are, right? So, I mean, if they're still talking about the Strait of Hormuz and the nuclear file, those are the main issues that are central to why the war was waged in the first place.
Yes, and President Trump has been consistent on that nuclear material question. For the markets, of course, the primary concern is what happens with the Strait of Hormuz. Let's get a take in terms of the energy market reaction to all of this and bring in Bloomberg's Stephen Stupczynski. Stephen, talk us through the market reaction. It's so difficult to pass mixed commentary from both the US and Iran. We were hearing from the Secretary of State, Marco Rubio, suggesting that a deal could come as soon as today. The Iranians pushing back on that kind of time frame, it seems. What do you make of how the markets have reacted to all of this?
You know, I think when you take a step back and look at the situation, Hormuz is still closed, which is something that's tightening supply, could push prices higher. Yet, I think the thing that the market has been focusing on is an escalation of tension and potentially a restart to U.S. attacks on Iran. That was always a fear that if these peace talks, even ceasefire talks, were to break down, that Trump would hit the missile hammer and start to really ratchet up that rhetoric. And it seems that he hasn't done that. He hasn't gone to that toolbox. Rubio also said that they're looking to try to come to some sort of diplomatic agreement here. So in the broad rainbow of different situations, this, while it isn't opening up the strait and while there is still a divide in these ceasefire talks, they haven't broken down yet. And the fact that they are talking about maybe something coming in the next day or two, that is positive in the eyes of some traders. And as long as there isn't a risk to the broader region, because you have to remember last week Bloomberg also reported that Qatar, Saudi Arabia, the UAE all pressured the Trump administration to take the diplomatic route, to take a peace deal and not to risk restarting attacks to the region that could affect infrastructure, that could result in Iranian counterattacks. So I think with all of that in mind and weighing the entire situation, I think that's why we're seeing a bit of a sell-off today, because perhaps we're closer to a deal than a resumption of that conflict that we saw that was quite harsh in March.
Stephen, is there also not a reaction today to the Iranian news agency also saying that 33 vessels, including oil tankers, container ships, and other commercial craft, actually did successfully sail through the strait? 33, I believe, is the highest number since the war began over 3 months ago. So the market has to account for this resumption of sorts, of a slow trickling through of some of those vessels.
I mean, certainly this is something that the market is watching on a daily basis, right? My colleagues and myself, we're watching these ships, we're writing about it daily. It is something that is clearly on the minds of the traders. Yes, that is an increase in ships, 33. You have to remember, though, that before the war began, we were 135 on a daily basis. So an increase from essentially zero is certainly positive. And you don't just have to take Iran's word for it. You know, let's look at liquefied natural gas, a small slice of the energy market that I'm particularly obsessed with. When you look at LNG, just in the last about 24 to 48 hours, 3 LNG ships from Qatar and the UAE ADNOC's Das Island LNG export facility both went through Hormuz from Sunday into Monday. 3 vessels. While normally it would be 3 vessels every day before the war began, there have only been 4 other vessels before just the last 24 to 48 hours. So you're already seeing a ratcheting up, at least in the very short term, of LNG, which is somewhat positive. So does this mean that Iran is loosening their grip? Does it mean that some companies are paying? Are they making some sort of agreement like we saw with the Pakistan government when they were able to get their LNG shipments? They were able to make some sort of deal with Tehran to get Qatari LNG. I'm not exactly, you know, it's unclear exactly how it's happening. But you're right, there is indication that flows are increasing at least a little bit.
Stephen, thank you for the update. Stephen Stepczynski, with a particular focus, of course, on what's happening in gas and oil. Falling oil prices, meanwhile, of course, sending stocks higher this morning. The Stock 600 index gaining for a 6th straight session. In Asia, Japan's Nikkei reaching a fresh record high, while Japanese government bonds have rallied. Let's bring in Venram, our strategist from our Markets Live team, for the latest in terms of the market reaction. Ben, I want to start more broadly on the global bond rally that we're seeing, at least in the session today, and we're seeing that reflected in European sovereign debt as well. How far could this run? How much further could yields fall?
Well, I think that, you know, there's going to be much of the relief is going to come for the long end, because I think duration has gotten massively sold off in the past few days, Tom. So I think that, you know, this could mean about, mind you, the bonds, long-dated bonds that have already started rallying. So there's much ground they've covered. So, but I think that this could go another 15 to 20 basis points on the 30 years, specifically in Germany and in the US. I think in the UK there is scope for gains as well, but political uncertainty is going to hold back investors a bit.
Mm-hmm. And what is the drop in the price of oil due to central bank expectations? You look at the Eurozone, the ECB is priced about 20 basis points for a June hike. You've got similar priced in for the Bank of Japan, less so for the UK. But I just wonder whether we also are bound to see a reaction in the front end of the yield curve as well on back of the lower oil prices.
Absolutely, Jumana. When it opens tomorrow, I think we'll see a reaction. I think that, you know, the question is whether oil prices have been higher for long enough. Since the start of the war, we have averaged, Brent crude has averaged more than $100 a barrel. So I think that, you know, there is a chance that the ECB may decide to push through with a hike, even if it be the first and the last in June. But I think it gets far more interesting with the Bank of England, which you mentioned. I think that the markets are thinking that, look, they will do about 2 rate hikes by the end of the year, but I think that the markets are kind of overpricing overpricing that prospect. I think that the Bank of England is unlikely to go more than one rate hike, if at all they do. And if there are signs that, the war is going to come to a decisive end and the traffic is going to reopen, I think the Bank of England may not at all. In fact, we had Alan Taylor saying last week that not raising rates is tightening enough because they were meant to go the other way. So I think that, we could get one rate hike from the ECB, none at all from the Bank of England. And the Bank of Japan, I think they just need to hike rates desperately here.
OK, Ven, thank you. As ever, Ven Ram, cross-asset strategist at Bloomberg MLive, with how the central banks may respond to what is happening, Jumana. As we look at still positivity across the global equity space, we saw Japanese equities at record highs, and here in Europe, gains as well across the benchmark of 0.7%. Just two sectors in negative territory, broadly risk on as we watch the Middle East.
Yeah, and let's go back to the cause of rally today, and that is expectations of a breakthrough. We are hearing now from the foreign ministry spokesperson of Iran, and he's saying, yes, there has been a lot of progress on many issues with the U.S., but an agreement is not imminent. And this comes back to what we've been discussing over the course of the last couple of hours. Do you actually need to see a breakthrough for these markets to keep rallying, or is the hope of a breakthrough enough to keep the rally going? And I guess we'll get an answer to that in the coming days.
Currently, you're seeing the bond markets rallying, as we've been discussing, US futures as well, when the US markets reopen after Memorial Day. After some decent gains, of course, last week, not just for European stocks, but US stocks as well. US futures pointing hard, and the S&P even by 0.9%. Yeah, geopolitical concerns on the back burner for now. That is it for the opening trade. We'll be back with you tomorrow, of course. The Pulse is up next with Francine Lacroix. Stay with us. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, we've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
Well, Brent crude falls below $100 a barrel as the U.S. says there has been progress with Iran. Secretary of State Marco Rubio says there could be a deal as soon as today, but Iran says an agreement is not imminent. The political crisis in Turkey deepens as police raid the headquarters of the main opposition party to evict its ousted leader. Plus, Huawei says it's made a breakthrough in making advanced semiconductors without cutting-edge equipment, potentially reducing the gap with TSMC. So there is a lot going on at the same time. It's also a bank holiday, not only here, but in the U.S. with Memorial Day and many, many countries in Europe. So global stocks are approaching record highs, although in terms of volumes today, we're pretty thin with a lot of indices closed. Crude oil falling after officials seem to signal the U.S. is nearing a deal with Iran to reopen the Strait of Hormuz and restore oil flows. And then the last 15 minutes or so, there are very many question marks about that as well. So I'm looking at gold, I'm looking at silver as a hedge against inflation, and gold 4,563.61. Let's take a look at the European markets map. Again, a lot of them are closed, so we can go pretty quickly to exactly what will happen in the next couple of days. You can see the DAX and actually the FTSE MIB in Italy is gaining a touch. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, senior U.S. officials say they're closing in on a deal with Iran that would reopen the Strait of Hormuz. But in the last few minutes, we've also had conflicting reports from Iran and the state of negotiation. Let's get more from Bloomberg's Xauusd Bercetci, who joins me here on set. Xauusd, what have we heard from Iran?
Yeah, well, let me just walk through the developments of the weekend, just in terms of how much optimism there was on Saturday, with President Trump posting on Truth Social saying that they were very close to an agreement, dialing some of that back yesterday and suggesting that the U.S. are not in a rush to get a deal across the line. Marco Rubio this morning, Secretary of State, obviously he's in India, so in a closer time zone, suggesting that a lot of the differences have been narrowed and that we could see an agreement in coming days. And just in the last couple of minutes, this is the weekly presser that the Iranian foreign minister's spokesperson delivers. He said that a consensus was reached on many topics with the U.S., so that's the positive bit. This is per Tasnim, the Iranian state media reporting. But then Bagai goes on to say an agreement with the U.S. is not imminent. So this has just come through in the last couple of minutes and suggests that there are still a couple of issues, and unknown at this point what those issues are, but we can take a good guess between the two sides, and that it doesn't appear from the Iranian side that they're going to get enough to get the deal across the line imminently. But that's not to say that maybe they can't agree on a framework towards later discussions.
Xauusd, talk to me a little bit about oil. So selling off this morning because there was a bit of optimism, but actually that can be walked back fairly quickly.
Well, Francine, oil is all about the Straits. And what we understand is in the deal is it's going to be two phases, essentially. It will be an extension of the ceasefire, as we understand, as reported by news outlets. This has not been formally reported, but essentially a 60-day extension of the ceasefire in which the first 30 days maritime issues will be addressed. Maritime issues here clearly referring to the Strait of Hormuz. Per, again, reported outlets over the weekend, we understand that in that time frame, in the first 30 days, Iran would commit to an unconditional reopening of the Straits in exchange for gradual sanctions relief so that they can start selling their oil again, and a potential unfreezing of some of those assets. Now, here again, there's been a bit of discrepancy between the two because Iran are pushing for bigger sanctions relief, more unfreezing of assets. They're estimated to have about 100 billion. The number that's being floated is around 20 to 25. But then, of course, President Trump back home has received a lot of backlash for this because the perception is that the U.S. are giving up too many of their negotiating points at the very first phase of these discussions before you've even started talking about the nuclear file, which is supposed to happen in 30 to 60 days of the ceasefire.
Yeah, that's the concern is actually on both sides. They want things, and it's difficult to see how they come together in such a short amount of time. Xauusd, thank you so much. Xauusd Bercetci, anchor of Horizons Middle East and Africa. Now, the European Central Bank is facing pressure to raise rates next month unless the U.S. and Iran come to a sustainable peace deal. President Christine Lagarde also says the central bank is set to lift its inflation outlook when policymakers meet. Well, Marco Valli, Chief European Economist and Global Head of Research at UniCredit, joins us now. Marco, thank you so much for being with us. So what's your main expectations on when the price of oil goes from here?
Yeah, I think there are good chances that the price of oil will stay around the 100 until we get a clear confirmation that the deal is done and the Strait of Hormuz is going to reopen gradually, but start reopening, right? So our baseline scenario is that energy prices will start easing a bit, starting from early summer. As far as I can see, we are still on track with this forecast. But again, I think it will be a gradual decline, right? Because there are so many risks around. And the Middle East, I think, will remain politically more unstable than it was before the war. So my expectation would be that energy prices will start easing by the beginning of the summer, but ultimately they will not fall back to where they were before the conflict anytime soon, because the market will continue to price in, I think, a high geopolitical premium.
Marco, what does this mean in terms of equity valuations and actually the difference between US and Europe?
Yeah, I mean, it's clear that this is an asymmetric shock, right? I mean, the US is a big energy exporter, and they have been hit much less, also because they have a lot of supporting factors. They have a powerful AI capex boom. They have very expansionary fiscal policy. They have consumers which are still in a reasonably good shape. So we are looking at 2% GDP growth for the US both this year and the next. While Europe, obviously Europe is one of the main losers of this shock, right? We are massive energy importers. We have seen already before the war started, expectation were for growth to be around 1% this year. Now we're going to be below 1% this year. If everything is going to play out fine, next year is going to be just about 1%. So all in all, we have like a massive underperformance of Europe vis-a-vis the US, and then very strong earnings in the US. Obviously, the AI boom is helping a lot. So my sense is that the shock is actually making the difference and the gap, the transatlantic gap, even bigger. And we see this very well when it comes to earnings expectation. Earnings have been very strong in the US, driven by obviously the AI boom. In Europe, things have been playing out a bit less strong. So this is really a shock that hits asymmetrically, and this is widening the transatlantic gap between the US and Europe.
Marco, what are you expecting actually Europe to go from here on end? Are you expecting a rate hike in June from the ECB, and how problematic would that be for growth?
Yeah, I think the ECB June hike is basically a done deal, right? The inflation forecast by the central bank will be raised quite meaningfully. I think for this year we are looking at something around 3%, if not slightly higher. Probably around 2.5% for next year. And in the second half of the year, in my forecast, Eurozone inflation will average around 3.5%. So this is not a shock that the ECB can look through, in my view, at least given how they have outlined their reaction function. And by the way, the ECB has been doing a very good job in communicating clearly their reaction function. So my sense is that with these inflation numbers, with growth clearly slowing, but we are not speaking about a recession, June hike is very, very likely. And then where do we go after June? My sense is that the economy will be weathering the shock, the rate shock, quite well, because I think that the rate sensitivity, particularly of firms, over time has come down because firms' balance sheet have strengthened over time, and this allows them to cope better than in the past with higher interest rates. Then if we are right in thinking that energy prices will start easing gradually by the summer, I think that the ECB will probably hike once more in September, but then they could stop.
Yeah.
I mean, the idea here is that they move from the middle part of the neutral range to the upper part of the neutral range without pushing monetary policy in outright restrictive territory.
Marco, talk to me a little bit about what the AI-related investment cycle in the U.S. also means for Europe. Are you seeing more? Are you seeing enough? I know there's $5 billion here and there bidding through, also through the Commission. Can that support European growth meaningfully?
I think it's going to be a factor of resilience, but for now it's still fairly moderate, but it's going to strengthen over time, right? I mean, it's clear that this is a huge technological revolution. It's clear that Europe is lagging behind, but at the same time, Europe obviously doesn't have big hyperscalers, but Europe can do a lot when it comes to adoption, right? And this is where the real challenge for Europe comes. And this is where Europe can actually gain in terms of productivity. This is where Europe actually can deliver. So my view is that yes, the European Commission is trying to make conditions favorable for this adoption to accelerate over time. The ECB, I think, has become more positive about the investment outlook, also, if not mainly, because they see that this is just starting and it's going to grow bigger over time. So this is going to provide the cushion to the shock and resilience to the European business cycle. Is that going to be enough to, in a way, close the transatlantic gap with the US? Obviously not, right? But again, when it comes to adopting new technologies, I think that Europe still has a lot of unexpressed potential, and this is definitely going to be a major source of support for productivity, for the investment cycle. Not now, it's going to be gradual now, but over the next 2 to 3 years, that's going to be a major growth driver.
Marco, how much do you worry about the war in Iran actually lasting for the better part of this year? And what does that mean for the European economy?
Yeah, that is a major risk. I mean, if we remain in the current stalemate situation, we cannot expect energy prices to remain unchanged, right? Because strategic reserves are coming down. So the longer the war continues and the longer Hormuz remains closed, the more upward pressure we can expect on energy prices, right? And if this happens, then obviously Europe is going to be hit significantly. What do we mean with that? Probably we are going to be able to avoid outright recession, but growth is going to be very, very weak, both this year and next, well below 1%. And inflation is going to accelerate to a level where the ECB can not just limit itself to bring monetary policy at the upper bound of the neutral territory, but most likely they would have to start hiking into outright restrictive territory, meaning towards 3%, if not higher. And obviously this would put additional downward pressure on economic activity. So let's just hope that we are not going to be getting there, because if we get there, then the transatlantic gap, also in terms of equity valuation, would widen further, and I would expect the dollar to remain well supported in the current environment.
Thank you so much for all of the insight. Marco Valli, there, the chief European economist and head of research at UniCredit. Now, Turkish police have entered the headquarters of the main opposition CHP party in Ankara. This follows a court decision last week that removed Özgür Özel from the party's leadership. Well, Bloomberg's Simon Demokan joins us from Istanbul. Simon, good morning. So what are investors actually watching for as this political drama unfolds?
Yes, hi, Francine. Financial markets and investors here in Turkey will be watching to see if this new political crisis triggers more instability in Turkey's financial markets. Now, of course, they'll be extremely concerned by the scenes that they saw over the weekend when CHP leader Özgür Özel refused to leave the main party's headquarters in Ankara. That's when Turkish riot police stormed the building using tear gas. Özgür Özel finally evacuated the building, but when he did, he tore up the eviction notice and said that he will be back. Now, of course, markets here in Turkey will be closed for most of this week due to a religious holiday. But when they resume trading next week, investors will be watching to see if we see pressure on the lira and Turkey's foreign reserves, as well as whether a further sell-off will be triggered in Turkish assets. Now, of course, this political crisis comes at a very concerning time for Turkey's economy. Since the crisis and conflict in the Middle East, the Turkish central bank has been selling billions of dollars in order to defend the Turkish lira. And this has put a strain on FX reserves. Also, as we see rising energy costs, this has also been fueling Turkish inflation, which is among the highest in the world. It's currently running above 30%. And now some economists are saying that the Turkish central bank could actually raise rates at its next meeting in June. The benchmark rate currently stands at 37%. So this political crisis could trigger instability in the Turkish markets as well. And this is exactly what investors will be watching for. And of course, this political crisis in the CHP party, the divisions, the power struggle, could also help strengthen Turkish President Recep Tayyip Erdogan's grip on power. Of course, he's been heading the country for more than 2 decades. Elections are scheduled for 2028, but they could come even sooner.
Simon, thank you so much. Simon Demirkan there in Istanbul. Now, coming up, the outgoing ECB Governing Council member, Madis Müller, sees a strong case for a June interest rate hike. We'll get more from his interview with us next. And this is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour only on Bloomberg Television.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Now, the European Central Bank is set to lift its inflation outlook when policymakers meet next month. That's according to President Christine Lagarde. Her comments confirm what policymakers, including Governing Council member Madis Müller, has signaled in recent days. Well, Müller told us that he sees a strong case for the central bank to lift interest rates next month.
We have the inflation that has picked up already. So in April, we had the headline inflation at 3%. So it's already by a percentage point higher than the 2% that we're targeting, and that of course is a concern. And I think one should be concerned about such inflationary pressures becoming more persistent or more permanent. This is what we saw in 2021-22 when the inflation first picked up, also as a result of energy prices increasing. So I think there's a good case to be made, but that still the ECB at this point needs to react because the inflation is our primary concern.
How much of a concern is the recent bond market sell-off for you? How does that affect the way you think about debt sustainability in the Eurozone? Because this is also something that is happening at the moment.
I think risks to financial stability that are coming from the high public debt levels, also high public deficits still in many countries. I think it is a serious concern, and the fact that investors in bond markets seem to be becoming a little bit more nervous again. Also, that is certainly reflecting the expectations of inflation being a little bit higher than this. I think this is certainly a concern. I think it's also perhaps noteworthy that the views on the bond market versus to the equity market, they seem to differ at the moment because there's still so much optimism apparently in the equity market among investors there, whereas you do see those signs of perhaps more concern in the bond market.
Balanced approach to fiscal and monetary policies at this moment is something that is very important. How do you see all of this playing out, and how much pressure do you think the central banks will be facing now due to what is happening?
Well, the fact that we are seeing quite significant budget deficits in a number of European countries, it's not making it easier to get inflation under control. So that's why the message also from many of us central bankers has been that first of all, having a significant budget deficit by itself is a problem. We need to have a clearer understanding how we get out of it in the coming years. But in the short term, as we see governments thinking of different support measures to ease the impact of the high energy prices on consumers and corporates. So here I think it's important to be just careful with those such measures. Those should really be very short term and very well targeted to be effective, and also not to put too much strain on public finances.
Well, that was the outgoing Estonian Central Bank chief and ECB Governing Council member Madis Müller speaking to us on Friday. Now, strategists are warning that bond yields will stay high even if the Iran war ends soon. Let's bring in Ven Ram, cross-asset strategist at Bloomberg MLive. Ven, thank you so much, as always, for joining us. So bonds everywhere have sold off. Is there any place to hide?
Well, there's certainly pockets to hide, Francine. I think that one of them has got to be Germany, because if you look at German inflation, Eurozone inflation, in fact, going into the war, it was pretty well anchored. But of course, with oil prices surging, it's a different story now. But even so, the ECB looks to be more agile than the Fed and the Bank of England in responding, because its reaction function is that much more sensitive, and they will likely be raising rates next month. So I think that, there is a good chance that inflation-adjusted coupons in Germany and in the Eurozone may be intact and more resilient than elsewhere. Certainly the case in Japan, certainly the case in the UK, and probably so in the US as well. So I think that, if you swap out all the coupons on German bonds into US dollar, what you see is that German bonds are trading at a premium to US treasuries. And I think that premium is very well founded. That premium is in the order of 15 to 30 basis points. And I think that is sustainable. And I think that therefore German bonds are the place to be, especially over the long duration.
So, Ven, Japanese bonds, as you say, are one of the things that we're really watching out for. Is the rally sustainable?
I don't think so, Francine, because even going into the war, the neutral rate was something like 1.5%. The Bank of Japan is obviously lagging behind it. They're not even at 1% now, so they're lagging behind a whole lot. But if you run the Taylor rule rate after the start of the war, and using the metrics that the Bank of Japan themselves have provided, I think that what you get is a prescribed rate of 2.8 to 3%. That's a very conservative estimate. So we are nowhere near 2.8%, which is why we have seen the repeated tantrums in the JGB market. Okay, today they've got a respite because of the headlines surrounding Iran, but the damage to inflation is done. And as long as the damage to inflation continues, I think that JGBs will trade at a significant discount to treasuries and to gilts. They are the most discounted securities among Germany, UK, and the US as well.
Then gilts have been hit particularly hard. Is there going to be any respite for them?
Well, I think that there is a sound case to be invested in long duration gilts, Francine, particularly the 30-year. We were doing 575. We have come off those levels already, suggesting that some investors are finding the yields attractive. I don't think there's going to be too much of a case for a rally on a tactical short-term basis, because we don't know how the political drama in Downing Street is going to play out before the end of June, possibly until July. But after that, if the storm blows over, I think there is a case to be invested in 30-year gilts, because net of inflation, net of the fiscal deficit outlook, you're getting adequately compensated. And I think that discount will narrow in gilts. So there is a case to be long 30-year gilts, I think.
Thank you so much, Ven. Ven Ram, cross-asset strategist at Bloomberg AmLive. I read every morning what Ven has to say. Coming up, life science investment firm Braidwell has made AI a centerpiece of its investment strategy. We'll speak to the company's chief investment officer, Alex Carnell. That's coming up next, and this is Bloomberg.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Brent crude falls below $100 a barrel as the U.S. says there's been progress with Iran. Well, the Secretary of State, Marco Rubio, says there could be a deal as soon as today, but Iran says an agreement is not imminent. The political crisis in Turkey deepens as police raid the headquarters of the main opposition party to evict its ousted leader. Plus, Huawei says it's made a breakthrough in making advanced semiconductors without cutting-edge equipment, potentially reducing the gap with TSMC. So Huawei is hailing a new pathway to shorten its 5-year gap with chip-making industry leader TSMC. If successful, it will allow Huawei to make advanced semiconductors without cutting-edge equipment. Well, opening trade anchor Tom McKenzie joins me now. Thank you, Tom, for joining us. So how does Huawei actually plan to achieve this?
Well, this is potentially significant not just for Huawei and for China, but for the global chip ecosystem, if indeed they can get to where they want to be. And what they've said is they've come up with a new process, a new scaling law, but also a new system to build additional transistors onto a chip and to make the transmission between those transistors much faster. And they're calling this process logic folding. That's how they've termed it. Basically, and the shortcut to this is they've come up, they say, with a new approach that will shorten the amount of time and shorten the gap that currently exists between the leading foundry, TSMC, and Huawei and its partner in China, SMIC, or SMIC, which is a foundry with whom they partner. We had expected the gap. The gap currently is about 5 years, maybe about 5 years plus for the most cutting-edge chips. What Huawei is saying is that they can close that gap and potentially start producing 1.4 nanometer chips as soon as 2031. TSMC says they'll be doing that in 2028. So they've shortened the gap if indeed they are able to do this, 1.4 nanometers being the next iteration, the most sophisticated and cutting-edge semiconductors.
So, Tom, what does it mean for other chip makers?
Well, front and centre is ASML, the provider of these lithography machines into TSMC's foundries, and because of export restrictions, they're not able to sell the top range into the Chinese market, these extreme ultraviolet lithography machines, and that's why Huawei and SMIC have been trying to find workarounds because they do not have access to those cutting edge kit. So ASML potentially is in focus because if others work out how Huawei is doing this, maybe there's some competitive threat to a company that dominates in terms of the production of this kit. In the markets today, not largely affected by this news, ASML. For other chip providers, it's maybe an example that the semiconductor industry is having to think round some of these restrictions and how to think about continuing scaling laws, continuing to get ever more energy efficient, ever more high-power chips into smaller and smaller space, and what some of the alternative approaches may be. Highly technical, but potentially Huawei is signaling that there are other ways of doing this.
So, Tom, what does it mean for, or how have the markets been reacting to this?
Yeah, I mean, so far, the last time I checked, a couple of the European chip makers were a little softer. I don't know if that's on this news specifically. ASML was actually, the last time I checked, was actually in positive territory. That may be more about the market sentiment today and the relief that we're seeing across global equities. I think what is going to be crucial, the test, is to what extent Huawei are able, if they do have this technological workaround, they're able to actually produce chips at scale and quality. Do they have the quality and do they have the scale? Because that's what TSMC, in partnership with ASML and other producers of tech equipment, are able to do, is produce these very, very sophisticated chips, but at a massive scale and consistently getting the quality. And that's very, very difficult to do. So that's going to be a key test of Huawei and its partner, SMIC.
Tom, thank you so much for joining us. Tom McKenzie, their anchor of, opening trade anchor. Now, Braidwell, a life science-based investment firm, has made AI a centerpiece of its investment strategy. Since its founding in 2021, Braidwell has backed early-stage AI biology companies, including Lila Sciences and Proxima. Joining us now is Alex Carnell, the company's co-founder and chief investment officer. Alex, thank you so much for joining us. I know you're waking up very early for this, and we're interested in finding out, actually, if you look at the current landscape for biotech investment in general, how's it changed over the last 3 years, and what do you expect? How do you expect it changing going forward?
Thanks so much, Francine. It's great to be here with you. It's radically different, I'd say, today and even in our portfolio than it was a decade ago. 10 years ago, most of the companies that we were looking at were so limited by the types of problems that they could solve, how long it would take, and how much capital was required to do it. And today, AI is allowing us to solve a set of healthcare problems that we simply couldn't solve before. And I'll give you a couple examples, both of what it looks like today and what that might mean over the future. Today, on the discovery front, what AI won't allow us to do is to solve all of disease in the next decade, but what it will allow us to do is go from a model insight to a molecule in just months' time. And that allows us to have a generational shift in productivity and at the foundational layer of what it takes to actually transform human health. Second, on the diagnostics front, it's radical what can be done in terms of using AI to synthesize complex biological and clinical data. And we have companies like Guardant Health that's using it to detect cancer from a simple blood draw, and Caris that's using it to match patients to medicines that can likely work for their tumors. But the third area, and this is one coming down the road, is the area that excites me most. What I would say is that most people tend to underestimate the risk they face from chronic disease and overestimate just how hard it is to crush it. And I think for the first time, we're going to see that AI can change both of those areas. We have a company in our portfolio doing exactly that. They're fighting to end heart attacks, strokes, diabetes, and obesity with a few simple, personalized actions.
So, Alex, I mean, when you talk about the advances in when you talk about advancement in chronic disease treatment, is this GLP-1s? Is it something else? And again, are we just at the forefront of the user case?
Yeah, you nailed it. So GLP-1s are a foundational medicine in terms of not just reducing our risk of diabetes and obesity, but really a wide aperture of places by which they can help us. We're seeing really interesting signals in everything from slowing the progression of tumors to helping protect us from addictions like drugs and alcohol. But I think it's only one of the key layers. And when we think about what an optimal health stack would look like and how those would come together, I think one of the medicines people don't appreciate most is what's called a PCSK9 inhibitor. And here, what I think people tend to miss is that heart disease claims more lives per year than cancer. And we already have all of the medicines available to help protect us from that, to essentially bring that risk down to under 5%. And we need the tools that come from AI to help us both know what to do and then how to take action on it.
Yeah. And so, Alex, when you look at, for example, AI, right, and how it's reshaping, drug discovery, as you said, how it's reshaping development, but also care delivery. Out of those three, where do you expect the biggest impact in the shorter amount of time, thanks to AI?
Yeah, I think it's going to be first in the care delivery side. When you think about how challenging it is for a doctor today to be able to see the sheer volume of patients that they need to take care of and be able to stay on top of all of the clinical data that's on the cutting edge, it's a really complicated challenge. And so what it does is it creates the opportunity for new tools to emerge that both enable them to communicate better with their patients, to help all of us understand what actions to take, and then make it as easy as a single click to be able to get those medicines, something as similar and as easy as getting toothpaste from Amazon.
Or what does that mean going forward? So when you look at, key investments or more opportunities, does it change the way you think about the kind of the patient to doctor relationship going forward?
Yeah, the future is going to be all about patient back. When we think about the world we live in today, most of us are losing out on the opportunity to live about 5 years longer than we otherwise could. And so the type of investments that are going to be the most attractive in this next period of time are going to be all of those that start from the patient and make it easier for them to know what to do, how to do, and actually go and do it.
What does that mean going forward, Alex? Where are you most interested in investing in? If you look at some of your key investments in the last 5 years, how different will they be going forward?
Yeah, I think going forward they're going to be a lot different, because today, if those ideas aren't grounded from an AI native perspective, those are companies that are going to be at a material disadvantage. That's going to manifest itself in terms of the speed at which they can go to discover new medicines, the probability of success that they will have, and then ultimately the impact that they can have on human health. And so what it does is it really opens up the aperture for companies to be able to solve problems that we couldn't before. And working at those companies that are solving the problems that we haven't yet solved, I think is going to ultimately yield the highest rates of return and the greatest impact on human health.
Alex, is there something that actually investors are missing? I know you look for opportunities where others don't see it, but with the speed of change, is there, I don't know whether there's a dislocation in your space, in the health science space, or something else that investors should be watching out for?
Yeah, look, I think one of the biggest areas that people could be missing out on is that we're going to start to enter a world where intelligence is becoming commodity. It's going to be something that's more of a given than it has been historically. So how does that manifest itself in terms of impact? You take, for example, Lila Sciences, which you mentioned earlier. We're starting to see scaling laws to scientific intelligence. And so you can imagine if scientists everywhere have that as a co-pilot that sits right alongside them to solve some of the most complicated problems facing humankind, it will enable them ultimately to be able to do that with a much more rapid pace, a much higher probability of success, and be able to crack a series of codes that we haven't been able to before. And so that's exciting because you go through different periods of time in innovation where a lot of that innovation looks like slight improvements on what came before. And I think we're going to enter a world now where we're going to go after the problems that haven't yet been solved, and we'll be able to do so much faster with much less capital and a much higher probability of success. And that often yields some of the greatest returns and should bring a lot of capital back into our space.
Is there a space, and we've talked a little bit about nutrition, exercise, testing, but also, preventative medicine, for example, for chronic diseases. Within all of that, is there a space that you think will be particularly lucrative in the U.S.?
Absolutely. When you think about what's going on, the sort of two mega trends we see in the U.S. right now, both is that AI is becoming our front door to healthcare, because we trust it with everything from our emails to asking, hey, what does this signal mean on a blood test? And at the same time, the current $100 billion revolution we're seeing in GLP-1 medicines, to me, is most exciting, because what it's essentially showing us is that people are voting with their own feet. They're willing to go out and go get these medicines at a rate of change that we hadn't seen before, and they're willing to pay for them themselves. And so what that shows us is that as these two trends come together, as basically people want to own their own health and have the ability to do so with AI, that should converge on an opportunity set for both the investments to follow it and for people to live longer and healthier lives.
Alex, thanks so much. Alex Carnell, there, Braidwell, co-founder and chief investment officer, joining us this morning bright and early. Now, the dramatic turnaround at Rolls-Royce under Tufan Erginbilgic is one of the greatest corporate overhauls in recent times. He made headlines for describing the flagship engineer as a, quote, burning platform when he took the reins in 2023. Shares are now up more than 1,000%. Now, in the latest episode of Leaders with me, Francine Lacroix, I asked him if he feels like he's carrying the weight of British industry when so many companies have spoken about exploring a listing in the U.S.
Yes, sometimes, because I think there's this discussions whether companies should move to the U.S. market. I'm sure, Francine, you asked those questions. So actually demonstrating that you can be in this market. And frankly, after a point, it is never about you. You don't want to fail all the stakeholders, employees, investors, even government. Once you pass a stage, right? Okay, you have a success. Now, make sure that is sustainable success and actually you can build on it.
What can other British companies learn from Rolls-Royce?
I mean, a lot. But business model level, are they actually set up to win? If not, fix the business model. And you do that, then of course you need to energize your employees. It's not about you. It is about 50,000 people. I am non-compromising for that. You may say blunt or whatever, but non-compromising. Mediocrity at that level kills the organizations, but also good people, then you need to develop them and have a great career in this.
How do you manage good people? What do they want?
Effectively, you want people in your organization who are highly marketable, but they want to stay with you, right?
Right.
So that's what
that's
you
a
want.
secret sauce.
Exactly.
Right.
That's what you want, right? That is almost 360 performance management in my mind. And 360 performance management always, if you want to close the circle, it finishes with reward and recognition. And then grow the company, because that creates all sorts of career opportunities. Shrinking companies, you have less opportunities. Grow the company, that actually feeds itself.
Right. I mean, every time I see you, we speak about small nuclear reactors.
Yes.
Because you it's not a 360 view. It's a very granular, it's almost problem solving. It's engineering.
I always go to big picture before I come to small picture. Europe cannot do without it. World needs it for net zero. Frankly, Europe needs it for supply security, full stop. Because even before geopolitics, Europe needed that. After some geopolitical events, frankly, Europe needs it more than that. So therefore, SMRs make sense at big picture because they are less risky, because smaller plants and manufacturing activity. Nuclear industry has a bad sort of experience with projects. They take longer, much more expensive. SMR, 85% manufacturing process. You learn. You learn, and it is modular, it is standard, rather than every nuclear project bespoke EPC project in a way, right?
Anything could happen in the world of politics, as we've seen.
Yes.
Right. How do you deal with politics, with events outside your events? And even here, you could see a change in government with reform coming into power.
Yeah. I have a principle in business. I always tell people, once you get into trouble, it is too late. So you need to prepare the company before you get into trouble. So what does that mean? Like, we are actually living with it as we speak, and last year we lived with tariff. But first of all, make the company very resilient. That was our drive. We did that. So external shocks, we actually deal with it a lot better. Mindset is more important than anything else. You need to have the mindset and the response capability in the company. You need to develop that before you are in trouble, because it takes some time, right? And then you need to be agile using that capability. And then last thing you are going to do, you are going to be action-oriented, not explanation-oriented.
But if you don't know what the trouble is, are you scenario planning for all the things that could change?
It's not about actually predicting the world. It is about how your company now thinks about dealing with external shocks, right? So that is the capability, the processes, the mindset. Like, we are now responding to current shocks. I can assure you, we couldn't do half of what we are doing 3 years ago. Probably 10%. Probably when I said something, people would look at me with blank eyes. What is he talking about? Today, I don't need to say a lot. I need to give the context, and people are in action.
And the full interview with the Rolls-Royce CEO has a global release on Bloomberg TV later today at 10 p.m. UK time. Coming up, the number of people dying from Ebola rises as surveillance systems are overwhelmed. We'll have plenty more on that story next. And this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
What happened was you were out.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, more than 200 people are now thought to have died from Ebola in the Democratic Republic of Congo as local conflict and violence disrupt containment efforts. Now, more than 900 suspected cases have been reported across 11 health zones spanning 3 eastern provinces. Well, our chief Africa correspondent, Jennifer Zabazaja, joins us now. Jennifer, thank you for being here. So what exactly is the latest?
Well, Fran, what we're hearing from the Africa CDC is they're calling the situation increasingly serious. And if you take a look at the stats, you can see why. There's at least 10 African countries that are now considered at risk due to this latest strain of Ebola. What we're seeing is increased measures across a number of countries in the region, but then also globally as it pertains to this latest strain. And that is, of course, because we don't have a vaccine for this Bundibugyo strain. You mentioned the Democratic Republic of Congo, which has really been the epicenter of this Ebola outbreak. The country is facing an unstable region, notably mistrust from the public and strained health systems. That's leading to what the WHO says is impeding efforts to scale up Ebola contact tracing and also identify infections. And so, as I mentioned, we are seeing increased efforts by a number of countries in the regions. Today, we are awaiting a ministerial meeting, an African high-level ministerial meeting that's going to be convened. It's not just going to be attended by African ministers, but also globally, a number of leaders will be in attendance, including European leaders. And over the weekend, we saw more resources and funding being deployed, including the Gates Foundation, which announced $15 million that they said was going towards emergency funding in the region. But still, quite a lot of effort, and it's still a dire situation for a number of those on the ground. And we're hearing that from the countries that are being asked for at least $319 million just to stem the outbreak and contain what the WHO and the Africa CDC is calling an increasingly serious situation.
Jen, without a vaccine, how are authorities responding to the outbreak?
A lot of the efforts right now, Fran, is focused on community outreach. And really, I mentioned earlier the mistrust, and that's an important factor of what we're seeing right now. We actually just got a new report from ActionAid DRC that is mentioning just how much misinformation and denial is impeding efforts to really trace the virus. And so a lot of effort has been made into education of the communities, but then also globally, we're seeing a number of countries stepping up screening and surveillance. That's not just in the regional countries, but also the United States announcing that they're working with private companies and also international partners to expand testing capacity and explore potential antiviral treatments, because as you mentioned, of course, we don't have a vaccine for this latest strain. But, you know, we've been hearing from a number of aid groups on the ground. We even featured one of those in our latest Next Africa podcast, and they talked about just how much strain they're facing on the ground. They're still facing declining equipment. They need equipment in terms of the transmission of the virus, and so they need a lot of emergency gear that they don't have. And so still, we are seeing increased funding, as I was mentioning, but we're hearing from officials on the ground that are saying there still is a lot more that needs to be done, not just from a financial perspective, but also from help with the communities, many of which are very vulnerable already.
Jen, thank you so much. Jennifer Zabazaja there, Bloomberg's chief Africa correspondent, with the very latest, of course, on this Ebola outbreak. Now, this is the picture across the board. Again, many indices are closed for holidays today. Global stocks pretty much approaching actually record highs as crude oil is falling. Officials signaling that the U.S. is maybe nearing a deal with Iran to reopen the Strait of Hormuz and restore some of the oil flows. Now, we've seen a little bit of fluctuation of hope on that, and you can see then gold 4,555. Now, on tomorrow's program, we'll be joined by the chief executive of Audemars Piguet. We'll be discussing the viral pocket watch collaboration with Swatch, so don't miss that exclusive conversation. That's at 9:45 a.m. London time tomorrow. Up next, catch my conversation with Bloom de French Gates for Leaders with Francine Lacroix, the podcast. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show.
We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible. Bloomberg Surveillance. We're talking about it.
I think the productivity increase is not going to be marginal. I think it's going to be an order of magnitude. It's going to be significant. We're working on it internally, and we're really excited about it. I could see a world where an analyst who previously covered 20 stocks could cover 200 because they are maybe managing a fleet of agents that looks at all these stocks and tracks them. I could see a world where we're able to tackle a far greater number of top-of-funnel ideas and do a bit of work on them and more accurately pick what the best 15 to 20, best long ideas in a given year are. So I actually think it's going to reshape how we do things in the long term.
One of the things we struggle with is it's very easy to get siloed as an analyst, and these are the sectors I look at, these are the tools I rely on, these are the models I've built, and for us, we are spending more and more time as a research team collaborating around ideas with multiple people looking at sectors or trying to solve key questions or things in the market. And so the ability to have standard tools that we're all using to track lots of different things, to inform how the models are trained, will be super helpful, I think, in people being able to pick up someone else's work and say, I totally get this because it's in the same vocabulary that I do it myself.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance.
flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a live update. Here's a look at what's making headlines around the world. The United States and Iran are inching closer to a deal that could end the war launched 3 months ago. Senior U.S. officials say Sunday the deal will open the Strait of Hormuz, even as President Donald Trump insists he would not rush into an agreement. Iran's semi-official Tasnim news agency says the deal draft could still collapse because the U.S. is blocking several clauses, including Tehran's demand that its assets be unfrozen. Oil fell on the news of a possible deal to open the strait. Brent is trading back below $100 a barrel, and WTI is closing in on $90 a barrel. Qatar and the UAE sent 3 tankers of LNG through the strait in the past, and over the last 30 other vessels, including Iraqi-loaded supertanker, have sailed through. Turning to the Fed, BlackRock's head of global fixed income for Asia Pacific says the central bank may have enough reason to justify an interest rate cut rather than much talked about hike under the new chair, Kevin Warsh. BlackRock saying, quote, in a forward horizon, there is going to be some pressure in the labor market that could suggest either doing nothing or a cut. And in entertainment, The Mandalorian and Grogu won the box office weekend. The film, which is the first in the Star Wars franchise in 7 years, made the $102 million in ticket sales in the U.S. and Canada over the 4-day weekend. Although it would be considered a strong start for any other big-budget release, it's among the lowest debuts for a Star Wars film since the franchise owner, Lucasfilms, was acquired by Walt Disney. And checking in on the markets across the world here, really the Iran trade is very much in the equity market. You can see it there on European stock 600, up almost 1 full percentage point, illustrated as well in the DAX. Up 1.2%, and also in the CAC 40 over in France, 1.3%. But really the focus this morning, looking at the NASDAQ futures in the United States, trading up 1.4%, an absolutely blazing rally for U.S. equities expected on the open tomorrow morning. And going into the next board, and some of the other asset classes also being affected by the possible deal with the United States and Iran. Euro dollar catching a bid this morning, up about 0.33%. Looking at the German 10-year there, yields coming down really across Europe. It's not just in Germany, down 8 basis points. You see the same thing in France, Italy, and across the rest of the spectrum. When you look at Brent oil there, down about 5%, $5 a barrel, breaking below $100 a barrel for the first time in a couple of weeks. And there you have gold. They are catching a bit of a bid this morning, $45.57. We'll send you back to tape programming, bring you back another live update in just under 30 minutes time. I'm Oliver Crook, and this is Bloomberg.
The higher up you are, some people start to forget who they are. Because once you get into a position of power, people are always going to tell you, you're doing well, aren't you fantastic? You have to have truth tellers around you, and you have to be willing to listen. And so I think as leaders, it's our job to understand, when is it time to go? When do we need another leader in this role?
Last year, I spoke to Melinda French Gates, who has faced a lot of change in her life. And it's not just in her personal life. Her charitable work is also dedicated to change. French Gates began her career in tech, often the only woman in the room. She joined Microsoft as one of the few female managers in the company. She rises quickly, meets Bill Gates, they marry, and she becomes one of the wealthiest and most influential women in the world. And then she walks away. In her new book, The Next Day, she reflects on making that choice to change everything. I'm Francine Lacroix, and this is Leaders, the series that explores what drives the world's most influential people. Melinda French Gates, thank you so much for joining us. Now, you wrote a book, Next Day, which is inspiring. Why? And why did you call it The Next Day?
Well, I turned 60 last year, and so the book came out right around the time of my 60th birthday. And in writing it, as I approached that birthday, I realized I had been through a lot of transitions in life by then. And I thought, I've got something I'd like to say about this, because we learn a lot through transitions. If we pause and if we give ourselves time to learn, we can actually grow tremendously during those transitions, whether they're easy or whether they're hard.
But the next day is almost harder, which is what you
Yes.
explained, because you make a decision to do something. It's either leave a job, leave someone, reinvent yourself, but then it's after you do that that you have to look in the mirror, and that's it. That's the next day.
Yeah, and say, okay, now what? I even tell college graduates, university graduates these days, okay, you think the transition is when you go through graduation? No, it's when you wake up the next day and you're saying, am I really on the way to where I want to go, right?
When do you have to think about that, the transition? When you make the decision to leave something?
I think when you make the decision, but I think sometimes it's so hard to get through the transition that's to come. Let's say you're leaving a job, or in my case, I was leaving a marriage, or even, okay, I was pregnant and having my first child. It wasn't until after she was born that the next day I could say, oh my gosh, this is what I'm into. So I don't think it's till you kind of get to the next day that you can really, at least for me, start to process the transition and where you are.
And this is really the heart of what leadership is also like.
Mm-hmm.
So what does leadership mean to you?
Leadership means, are you getting the people that are following you on the path that you think is right? Are we on the same page about where we're trying to go with either their business or life or society?
What's the right way actually to be a leader?
Well, I don't think there's one right way to be a leader. Let me make that clear. I think there are many ways to be a good leader. But I will tell you, for me, it means living my values and having integrity everywhere I go, so that what I'm saying is also then how I'm living my life. And I think if we can show up as a values-based leader, it's easier for people to follow us over the long term. I think sometimes we have leaders in business, I've seen many of them, or in society, where they want you to charge the hill, and then as soon as you're done charging that hill, it's charge the next hill, and then by the time you get to the third hill or the third mountain, and you're pushing that rock up the hill, it feels like, no, wait a minute, can I do this again? Do I want to do this again? So to me, leadership is, if you can be very values-based going in, I think you can get people to follow you for a long period of time, I hope.
It feels like it's hard at the moment because of things, changing so quickly, because of disruption. When did you decide that that was going to be what you stood for?
So I worked at Microsoft for 9 years. I came right out of computer science and business school, and I started working at the company. There weren't very many women at the time, and it was a rough and tumble world. And I think tech is still pretty tough. And it was the Boys Debate Society. And I thought, okay, I can rise up. I can play this game. And I did play the game, and I did quite well. I was moving up the ranks in the company. But then about 2 years in, so I would have been about 25 at the time, I realized I didn't like myself. I didn't like how I was treating people outside of work, because I was treating them the same way I was treating people inside of work, which is the game we had to play. And I thought, no, this isn't right for me. And so I actually thought I would leave. But instead, I thought, okay, before I leave, I will try on inside this company being who I truly am. And to my surprise, I did not. I thought I was fall flat on my face. To my surprise, I actually rose in the company, and people came to work under me in my division who wanted to have that type of leadership. And I thought, oh, this can work. There's no reason for me to be somebody else, be myself.
And you have said that you don't mind conflict.
I don't. I don't mind conflict.
That's almost a superpower.
Yes.
If you use it for the right things.
That's right. And I also believe that in conflict, you can also still be yourself. I say to people, being clear is kind, because I'm giving them feedback so they can actually grow and become better, right? So I don't actually mind conflict, but I also think it's the way you do it. It's the tone you take. It's the precedence you set. I learned to do it in a way for me that maintained my integrity and hopefully, even though the feedback might be hard, kind to the other person.
So how? Do you have to be gracious?
Gracious, thoughtful before you go into it. One of my mantras that I started to live by, and I told directly my employees then and now, if I'm unhappy with work you have done, you will hear from me within 48 hours. I'm not going to tell you right away because I need time to think it through. If I'm angry about something, to calm down, that's on me. But I also am telling you, you're not going to get to your performance review and have a surprise. So if they pass the 48-hour mark, they can be confident that the job they did was a good job.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
When I was speaking to Melinda French Gates, we kept circling back to one idea: how much being a woman shaped her leadership journey. She talked about little moments from childhood that defined her voice, and the very real internal biases she's had to confront, not just in boardrooms, but around her own kitchen table. Listening to her, it struck me that for her story, it seemed there was no separating the two. You have 3 children.
I do.
2 daughters, 1 son.
Yes.
Did you raise them differently?
I tried not to. So I have a daughter, a son, and a daughter. And I had to look at my own bias. I say that because I tried really hard to raise them the same, but I'll give you an example of where I had to look at my own bias. After dinner, I had a rule in the house that nobody leaves the kitchen till mom leaves the kitchen, which meant I wasn't doing the last minute duties. We were all doing dishes together and cleaning up and putting the food away. But I realized that the tasks I was asking my son to do were different than the tasks I was asking my daughters to do. And I had to look at that and say, why do I think he should be the one to put out the garbage? The girls could put out the garbage. Why do I think they should be the ones to put the dishes in the dishwasher? He can do that. So I had to look at all those roles and say, let them decide who's going to do what, right? I say that because I think we all have bias inside of us. When I was at the foundation and I would sit at the head of the table with, a co-chair sitting next to me, my former husband, we would have a group of men and women, often about 24 or 30 sitting around the table. And I had to even look at myself and say, am I helping make sure that both the men and the women speak equally? If I see a man talk on top of a woman, I can say, just a minute, she was about to make a point. Or, oh, she made a point, you don't need to repeat it. Right? Or if a woman did it to another woman, I needed to say, hey, not okay, right?
Were you always like this?
No. Oh my gosh, no. These are all lessons of a lifetime, right?
But growing up, you had a great dad,
I
right?
did.
That tried to also show you women in the space world that was quite difficult because there weren't that many because he worked for the Apollo missions.
That's right. He was an aerospace engineer. And both of my parents believed that all 4 of their children should be educated all the way through university and educated equally. And my father knew to go the extra mile, which is amazing, with his 2 daughters. I'm the second of 2 daughters. He pointed out to us that as an aerospace engineer, we'd go watch those Apollo missions. We'd watch the rocket leave the launch pad. But he always said to us, look, my teams are better when I have female leaders on them, when I can find female mathematicians and pull them on the team.
What did you learn from your parents on leadership that then you brought to Microsoft and then the foundation?
I learned from my parents that you should use your voice. So we grew up Catholic, but even when my parents had things they didn't believe that the Catholic Church was saying to the congregation, my parents were okay pushing back and even would write a petition to the priests in our parish saying, we don't believe in that. And so I learned that one person's voice gathering with others, they got 300 signatures, could push back on an institution. So I had those leadership skills honestly, even going, which was amazing for me, even going into computer science in college, because even in college, there were very few women, and I started realizing I could lead teams of young men to program and get projects done.
The corporate world seems to have changed, at least in most industries. Do you think your leadership would have been different if you had started working a decade or 2 decades afterwards?
Well, tell me how you think the corporate leadership has changed in the last 2 decades. Are you saying it's changed for the positive or the negative?
I think so, change for the positive. There's been a consciousness about putting more women in leadership roles, and that means more emotional intelligence than maybe in the early 2000s.
Yes, I agree with that.
I don't know whether we're regressing now.
Yes, that's why I'm asking you the question. You know, I can't play exactly the script of if had I started a decade later or 2 decades later, but I think it would have been easier on me. And I question myself. I had a lot of doubt. I think women in general tend to carry a little bit more doubt because of what society has told us for so long. I see it less, for instance, now in my 23-year-old daughter than I do even a little bit in my older daughter. But what I do know is that I want for the next 4 generations that come behind me, I want fewer barriers for women. I want the workforce to be easier for them. I want them to know that they can find allies in the workforce. I want them to know that they have the same opportunities men do when they come out of university, and there are natural networks to step into. I think some of the barriers have come down, but I don't think all of them have come down. And I think it's our job as female leaders and other male leaders to make sure we continue to lower those barriers.
How do you think about the men?
I think of them as allies. They need to be allies in this, right? I know so many men that say, gosh, I educated my son and my daughter equally. They get out in the workforce and now I see it. Now I see what my daughter is up against, my adult daughter versus my son. And so I think it takes, because many corporations are run by men, it takes them to say, we're going to create a different culture here. We are going to make sure that not just the males, but the females in our company lead.
When you speak to chief executives, world leaders, I know we think a lot about people just staying too long in either positions of power or in places where, you know, they should have moved on. How do you think about that?
I think sometimes people stay too long because their ego's attached to the job or because they're too afraid to make the transition. And they may not even realize they are afraid, but it does take courage to make a transition. And so I try to say to them, look, there's something beautiful on the other side. But when you make the transition, you're also making room for what might come next for both you and whomever's to come behind you, right? And so I think as leaders, it's our job to understand, when is it time to go? When do we need another leader in this role?
How would you advise is it up to the people that surround them
100%.
to say, like, look, hold on, think about what you're doing? Or is there something that they need to think about from day one?
I think it's both. I think they need to lay out for day one, what are they trying to accomplish? What happens if they don't get there? What is their exit ramp for themselves? You know, do they have a time limit? Like, if I get X done by year 5, but if I don't, will I leave? So having a plan going in, and then they have to surround themselves with people who are truth tellers and who they will truly listen to, right? Because once you get into a position of power, people are always going to tell you, you're doing well, you're doing great at this, aren't you fantastic? You have to have truth tellers around you, and you have to be willing to listen.
I feel like that's the hardest thing. It's making sure that you're not in an ivory tower where people say you're wonderful and actually you're doing things that are wrong.
Absolutely. I worry about that for myself. I worried about that at the foundation, like, who's not telling me the truth? And I knew there were a lot of people who weren't, but you know what? I could find the 2 or 3 that would tell me the truth about my leadership or something they didn't think was right about the organization. And so I had to make that safe for them. I also, outside of that, I'm very close to my family. And so my 2 younger brothers, my older sister, they will tell me the truth. And they never, ever let me think that I'm all that, especially my brothers.
The
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
I couldn't sit down with Melinda French Gates without asking about the challenge of navigating her identity when it's easy for people to define her by her billionaire status and famous ex-husband. But she was quick to acknowledge her privilege and explain that privilege isn't the thing that makes you special. Being special is something you have to work for. You faced criticism because you're a billionaire.
Yes.
How do you push back in saying, actually, I have values and I care about everyone despite my great wealth?
Well, I think first I make sure I acknowledge I have privilege. There is no doubt I have privilege. But I'm a human being. And part of me even writing this book was for people, hopefully, who choose to pick it up and read it or listen to this podcast, feel like, oh, I understand a little bit better where she's coming from. She came from a middle-class family. She's trying to live those values out in the world. So yes, she may be surrounded in great wealth, but maybe she's not like some of the other big billionaires I see in the news, because we're not all the same. Just like not all people who make $100,000 salary are all the same, not even close.
And you chose actually from a quite early age on how to use your wealth, but also how to educate your children.
Absolutely. I had this phrase in the house, just because I can or just because we can doesn't mean we should. And so I had for my kids, each of them had an allowance. It went up as they got older to help them manage money, but there were many things they wanted to buy. My oldest daughter in particular, I remember there was a purse she saw in a store window she had to have when we went by. She said, but you can buy it for me. Of course I could buy it for her. But I said, but if I did, what would that be saying to the other girls in your middle school? Wouldn't it separate you?
But was that also a reaction to people that you saw use money in a wasteful way?
It wasn't because I saw people wasting money. It's because I went through universities with some other peers who had come from great wealth. They threw their privilege around as if they were special, just because they came from wealth. And what I knew was they weren't that special, right? And so I didn't want my 3 children to grow up thinking they were special because they had a father with a certain name or we had wealth. They would become special if they lived out who they were and they figured out who they were and what values they had and what career they wanted to have. My oldest daughter, for instance, is in her medical residency program. I think she's going to become a pediatrician. I think she will be an incredibly special doctor because of her academic work, but because of how she cares for her patients in that clinic. That is what will make her special.
Melinda, do you worry, when you were going through the divorce, did you worry about the children or did you worry that it was the right decision?
I worried about both, for sure, but I really worried about, is this the right decision? And once I knew it was the right decision for me, I knew I just had to do it. I couldn't stay. If I couldn't live my values out in my home and in my marriage, how could I role model for my children or live my values out in society?
Was it ever difficult to be the wife of? Did you have to work doubly hard to be Melinda French Gates?
Of course it was hard. Yes, of course. First of all, I didn't even take on the last name at first when I first got married. Just the thought of having this big name that was quite well known, that was odd to me. But then, as I talk about in the book too, as we went on to do our foundation work, and we had the foundation with both our names on it on purpose because I believed in equality. But, even as I would go in to meet with prime ministers, I remember a particular meeting here with one of the prime ministers who will go unnamed. It was a he in the UK. You know, the two of us walked into the room, and the first person that prime minister addressed after he'd met both of us was Bill with his question. But I had to learn to speak up early and often in the conversation for them to realize, oh, she really knows what she's talking about too when she comes in to speak to me about these global foundation issues.
Is that leaning in?
That's Sheryl Sandberg's words. I guess I tell my kids it's leaning forward in a conversation. So I learned that just as I was feeling a little bit diminished in the conversation, or maybe even the person wanted me to feel diminished, right? I learned as soon as I had that feeling, instead of leaning back, I said to my kids, I learned to lean forward into that space. And I call it leaning forward into that uncomfortable space. And then you use your voice or you say what's right for you.
Are you a trusting person?
Absolutely. I sometimes over-trust people, but I definitely trust people. And I'd rather walk through life trusting people than not trusting people.
Because
you can be yourself, you can be more open, you can be more real. I've known a few people in life who just were more closed, and especially if you're in a position of privilege, if you don't trust people and don't know who you can turn to, boy, can you become very insular and your world becomes very small.
But it's also quite rare to find a leader that can take criticism.
Very.
Right? And I don't know whether we're going in possibly the wrong direction because of, technology, because your ideas are more siloed, actually. You kind of go down the path of that being reinforced instead of open dialogue.
I am quite concerned about that as well. I think with the advent of social media, while maybe we thought it was going to do certain positive things, I think the downstream consequences have been far worse than we imagined. So having these echo chambers or these polarized worlds where we don't walk in spaces where we have open dialogue and you just hear what you want to hear, or you hear just super negative things. We have to do better than that.
Is that what you worry about the most, actually, divisions within countries, within the U.S., and then at a global level?
Yes. I believe we are far better off when we see the humanity in one another. I don't care if you live in Malawi or Britain or the United States or India. We are more alike as human beings than we are different. And yet I think social media and the polarization that has happened has made us feel more different. But I think we're better off moving society forward when we are more centered and when we can hear one another's points of view. And I'm telling you, when we're shouting at one another and throwing invectives around, we're not hearing one another.
How do we get back to that space where actually you can have a disagreement, but a polite disagreement?
I think it starts in community. It starts at the grassroots levels. We have to have places where people feel they can have an open dialogue, smaller town halls, smaller group meetings. And once you start to build that trust, then I think you can start to maybe accept somebody has a different point of view than you do.
Melinda, thank you so much. I have 3 rapid fire questions for you.
Great.
Is that exciting?
Yeah.
So here they are.
Okay.
What do people not know about you?
Oh, probably that I have an absolute addiction to chocolate. It's very hard for me to go for a day without chocolate.
I love that. What's the signature way you motivate people?
I try to be positive, and I try to bring out an positive attribute that they have inside of them and hold that up for them so they can see it too.
What's the craziest interview question you've ever been asked?
People used to, when I was married, ask me questions about Bill. And I'm like, I'm not going to answer that. Let him answer that.
Melinda French-Gates, thank you so much for joining us.
Thanks for having me, Francine.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. Senior U.S. officials say the U.S. and Iran are closing in on a deal that would reopen the Strait of Hormuz. U.S. officials told reporters that nothing is ready to be signed as negotiators work through precise language on key issues, and the final approval could still take several days. Oil is falling on signs of progress towards a deal with Iran. Lower prices could mean a break for U.S. travelers as the Memorial Day holiday traditionally marks the unofficial start of the summer, a period where demand for gasoline, diesel, and jet fuel typically rises. And shares of Delivery Hero trading above Uber's $11.6 billion takeover offer as investors bet that higher prices will be needed to clinch the deal. The stock touching its highest level since November 2024 amid growing expectation of a sweetened bid. Let's do a quick check on the markets here. Really, there's one trade this morning, and that is the Iran trade. You're seeing it represented really across all markets across the world. You see it there in European equities this morning, catching a bid really across the board. The stock 600 up 0.8%. The DAX up 1.3%. The CAC 40 over in France up 1.4%. And of course, those NASDAQ futures up almost 1.4%, expecting another big day for the NASDAQ when cash markets reopen tomorrow. Looking across the other asset classes across the world, euro dollar this morning also catching a bid. The dollar selling off ever so slightly this morning, down by about 1/3%. The German yields, and really this is the story across Europe, yields down, along with Brent crude, while gold spot catching a bit of a bid this morning. We'll send you back to tape programming. We'll bring you another update in just under 30 minutes.
It was definitely ruthless about killing the complexity and the drag in the back. There is massive potential in this bank. Some of it needed to be unleashed. Things don't become complex by design. They end up becoming complex by lack of focus. We needed to be agile. So bringing the focus at the simplification will allow you to start dealing with it.
I'm Francine Lacqua, and this is Leaders, the podcast that explores what drives the world's most influential minds. Joining me this week is George Alhedri, the chief executive of HSBC, one of the world's biggest banks. He's been in the top job since September of 2024 and not shied away from difficult decisions, including a huge restructure, slashing thousands of jobs. While some might consider his methods ruthless, HSBC's share price has responded positively. It's roughly doubled to a record high since Alhedri took over. And after an eventful first year, I wanted to catch up with him and dig into those management decisions, understand how he's evolved as a leader, and hear how he's thinking about AI. Georges, thank you so much for speaking to us.
Great to be with you, Francine.
We were counting how many languages you spoke. 8?
So I've studied 8 languages. Other people should judge if I speak them.
Do you have a love for languages?
I'm fascinated by languages.
Because
if you're fascinated by cultures, then you're fascinated by understanding how they think and how they express themselves. And that basically naturally links you to understanding their language.
Can you only be a good leader if you understand people?
I think you have to definitely listen. And if you can listen in their own language, then even better.
You grew up in Lebanon?
Yes.
And what was your early childhood like?
So I grew up in Lebanon. I have At age 18, I moved to France for my university. I then picked an internship in Germany, and by coincidence, I ended up doing an internship in banking. So I went back to Paris to finish my postgraduate degree in finance, statistics, and economics, because I enjoyed it, of course. And I picked up my first job in Japan. And then back to London at that time, up until the time where HSBC hired me, and that was exactly 20 years ago.
At the time, you wanted to be an engineer. So what attracted you to finance?
So I absolutely wanted to be an engineer. I studied as an engineer, and as you know, back to your question about languages, I had studied German for about 10 or 12 years at that time. So I wanted to do an internship in Germany. The only internship I managed to land was an internship on the trading floor in Frankfurt. So I took it, and then I got addicted to it.
What did you like about it?
I like the pace. I like the still, you know, at that time, remember, there's a lot of financial engineering. So you're still using a lot of your engineering skills. You know, it still happens, right? And all sorts of, you know, it's highly transferable to finance. I liked the accountability. I liked the early responsibility you can get. So this is where it started.
Xauusd, did you always want to be a leader? Were you a leader as a child?
It's difficult to define what a leader is, especially if leader as a child. If it's a matter of living up with high standards and high values and high integrity, and being able to project that around you, then yes, that started very early with me. But there are certain traits in leadership that really resonate with me. The first one is you lead by example. You walk the talk. You demonstrate that things apply to you as they would apply to anybody else that you expect them to be applied to, and you don't never make an exception for yourself.
When you look at leadership, how does, I guess, the young formative years, you know, give you a sense of who you will become?
You learn and you feel what is right and what is not right. And a number of people around you, including my direct family, my parents, you know, kind of form part of how you think and what ethical standards you set yourself and the integrity by which you operate. And then sometimes around you, you feel things aren't right or aren't fair. And it's very important to stand your line, to hold your line.
That's difficult. How do you do that?
It is difficult. Discipline. It's very important to hold the discipline, and it's very important to think of yourself as your own brand. If you want your own brand to remain the brand of integrity, then it's very important you stick to it.
I've heard, I mean, some chief executives see it as, you know, they decided from very early on who they did not want to be. Is it choosing who you do not want to be or who you want to be? What's easiest?
I think both go hand in hand. It's very important to realize who you want to be. And by comparison, realize also what are the traits you absolutely do not appreciate, do not regard, and therefore that you want to stay away from.
Talk to me about your favorite pre-CEO job at HSBC. Do you have a place in the world where you really kind of had to hone in on your leadership skills and understand the culture?
I've spent 20 years at HSBC now, and there isn't a single geography on the planet where I spend that long. So there is a sense of belonging for me to HSBC that supersedes any kind of physical attachment to any place. I mean, with HSBC, I've been, I don't know if I can count now, however many dozens and dozens and dozens of times, probably hundreds, to places like Hong Kong, one of the two HSBC home markets. The Middle East, where I spent many years for HSBC, specifically in Dubai, but also roving around the whole of the Middle East. Europe, of course, the US, the Asia, as a whole. It's just amazing the opportunities you have to get there. And every time you're there, you spend time, you create more connections, you have an even deeper understanding. I mean, if I bring 10 people in a room and I ask them how many geographies they worked for HSBC, you would find people who tell you more than 10. That kind of experience, frankly, is unique.
But Xauusd, if you look at, for example, some of the Wall Street banks, they're more cutthroat, but they pay their people a lot more. Is that something that you worry about?
I mean, it's very important that we reward our people fairly, we reward our people competitively, and we reward performance. But that's not the only component. The other component is what is the environment in which they operate? Who are their colleagues, their bosses? What is their purpose? Who are they serving? Why they're serving them? Can they be their true selves? Can they operate with the highest integrity standards as they wish to? All of that kind of form part of the value proposition HSBC offers its employees. And this is what makes the kind of equation collectively work for all our colleagues.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Everybody has to make decisions, big or small. But not everyone runs a bank with 200,000 employees. When Al Hedri took over as CEO, he really wasted no time making his mark, ushering in a big restructure and laying off thousands of people. So I was curious to understand how he thinks about company-wide challenges and what gave him the courage to move so fast and so decisively. So, George, talk to me about when you get the call that you've been appointed chief executive. What's your first thought?
Of course, the first thought is to be humbled and honored for being given this fantastic responsibility. But what really mattered for me is what I can do for this bank, not who I was or what my title was in this bank. Now, it so happens there's a lot you can do as a group CEO. In terms of affecting change or affecting, bringing potential to the bank. So it was therefore the great kind of opportunity for me to be able to do what I really set out to do and what I had the full support of the board to do.
But you moved fast, right? You got appointed and then you actually said, does a chief executive need to move fast to kind of say, right, this is the change and this is what we need to be? And is it all on you, or did you govern by consensus?
So, a few things on that, Francine. The first one is there is massive potential in this bank. Some of it needed to be unleashed. It needed to be unlocked. And some of that unlocking of the potential had to go through re-engineering of certain of our aspects, re-engineering the bank, rewiring the bank so that we can unlock this potential. Then, having been in the bank 20 years, operating in a number of geographies and businesses and functions myself, I've built a lot of experience and a very large network of colleagues who have been also feeding their input and their concerns, which kind of forms a big set of kind of action book, if you want. And then third, very importantly, I was already sitting at the board as a group CFO before I took the CEO role. And all these conversations I was having with my board. And if you have the support of the board, you, of course, have the kind of right to be able to act quickly.
But what was the most difficult thing about that first restructuring plan? Because you have to get rid of units that maybe you're attached to, having worked here for so long. There's, people that you like that maybe you've had to move around. Again, was it intellectual or, are you ruthless about it?
I was definitely ruthless about killing the complexity and the drag in the back. The most difficult part is when you have to separate with some of your colleagues. I think we've been very thoughtful. We've been very considerate. We've done it hopefully the right way and the most respectful way for the benefit ultimately of the firm and its customers. We needed to be agile. We needed to be, to be ready for a modern world. And to be that, we needed to be simple. And therefore, kind of everything then drives what decisions you take from that mission statement.
How did the bank become so complex? And again, this is something that actually most organizations have to face as they grow. I guess there's, various factions, or a lot of companies actually could just become much more simple and simplified. What did you see?
Entropy is a feature. Entropy tends to increase, which means complexity, if you do nothing about it, tends to increase rather than decrease. So things don't become complex by design. They end up becoming complex by lack of focus. So bringing the focus at the simplification will allow you to start dealing with it. That's the first observation. Second observation is you have to be extremely methodical. What has created the complexity? How can it be addressed methodically? Try to identify ways to be simple. Some of the ways to be simple is to decide not to do certain things, and this is why we exited a number of activities. The third thing is when you're taking structured decisions, you have to start from the top down. You can't take structured decisions from the bottoms up. This is why the first decision structurally I've taken relates to simplifying the group operating committee. We moved from more than 20 people to about 12. More importantly, we moved from 0% single accountability. Everything had dual or multiple accountability to now about 60% of our revenue is generated under single accountability. So that's important. And then the last thing, Francine, is to be patient, because we're not solving simplification overnight. It's going to be a journey, and we have to be relentless at that journey, quarter after quarter, month after month, until we get the desired outcomes. And that journey is still on, like we're not there yet.
But as a big chief executive of a big bank, you basically have, the shareholders that you need to please. So simplification maybe helps with them understanding what the bank wants to become. You have your clients, and then you also have the employees. So how difficult is it to juggle these, three masters?
So there is one consideration which fortunately the three masters align on, is being best at what you do. Your customers want you to be the best at what you serve them with. Customers tick. Your shareholders will pay you for what you're best at doing. They won't give you valuation for something that you're average. They will give you valuation for where you really command, where you're an authority in being able to provide that service or that product in that market. So the shareholders align to be the best. And then our colleagues want to be the best. Our colleagues want to win. Our colleagues are in a competitive landscape, and they want to win. And they basically thrive when we're delivering the best we can, and when we're delivering best outcomes, and we're basically the best at what we do. So, you take this as a guiding thread and you say, let's focus on that. Focus where we can grow in areas where we're the most competitively advantaged. And then everybody aligns, colleagues, clients, and shareholders.
Is that why you learned Mandarin? You wanted to be the best for HSBC?
Yeah, I don't think I'm the best at HSBC speaking Mandarin. That's far from it.
But you're the first CEO to speak Mandarin.
Possibly, yes. I think what is important is to gain access to understanding, the culture in which HSBC operates. And obviously one of the very important cultures within HSBC as a whole, but that is probably one of the least understood for, say, people living in London, like I'm living now, is understanding the Chinese culture. And, if you really want to understand the Chinese way of thinking, the way of reasoning, the way of negotiating or engaging or presenting simply, then there is no better way than kind of put the pain in trying to learn the language and see how it's done in the language.
It was quite bold because you took a sabbatical for it. Was it a difficult decision, or did you automatically know this was the right way to also service your clients?
First, I knew if I really wanted to make a leapfrog in my, early starts in Mandarin, it needed much more time than I could give it. Now, I'm proud to say I still take lessons. Whether I'm progressing or not, I don't know, but I'm still taking lessons. I'm maintaining that journey. But there needed to be a leapfrog at the start, which a sabbatical has helped.
Was it for yourself or was it for the bank? Because it's interesting. It was Mandarin and nothing, and not something else.
No, well, look, I mean, I've taken 6 months out, and there are a number of things I achieved during those 6 months. Some of them personal, some of them professional. But yes. It was full on.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The future is AI, and in our conversation, El Hedri made that very evident. But bringing colleagues along for the ride is one of his new leadership challenges. Talk to me about, in simple terms, right, how you see the bank in 5 years.
The world is moving fast. We need to move fast. Our customers are moving fast. We need to move fast. Their needs today will be different tomorrow. Their goals today will be different tomorrow. And we need to be continuously adapting to their evolving needs and their evolving goals, right? There are a few key components that can achieve this. Most importantly, the first component is the human touch, okay? We're still in a very much believer in a model where there'll always be a person to talk to. So we invest in our relationship management. We invest in our, people skills and capabilities. We invest in our people, simply.
So we're not being replaced by AI.
So that's the second component, is we absolutely need to be innovation ready and embrace it and enable our capabilities and be able to embrace a number of emerging payments through blockchain or tokenized deposit, all of which we launched, by the way, but that's an evolving world. But also being, Gen AI ready in particular. I mean, AI has been with us for 15 years, but Gen AI is clearly bringing something new to the equation. Now we have more than 100 cases, of which about half of them are already live in production, that are transformational, and they're going to change the way we as humans operate. And while we as humans will not be replaced by AI, if we don't know how to embrace it and upskill ourselves using it, we will become obsolete. So this is why my call to our colleagues has been to bring all of them along the journey of how can we best use Gen AI opportunities, because for those who don't use them, there is a real risk that they will be displaced. But those who will use them are going to be part of the future.
But if you're a young kid today and you want to get into banking, what do you study?
Let me try to answer it with two-pronged approach. The first one, Gen AI specific, right? We now rolled to 170,000 of our colleagues internal productivity tools that can materially improve their capabilities of reading documents, reading emails, writing documents, emails, querying, challenging, thought process. 170,000 of our employees. I mean, soon all the way to the 200,000+ employees. Of course, I will be monitoring usage. I'll be monitoring super usage. Those will be the most, kind of influencing among their colleagues to drive the utilization. But utilization is not optional, because that's how people remain very relevant in the future workforce 5 years down the road. But we're using Gen AI in wealth, we're using Gen AI in markets, we're using Gen AI in contact centers, we're using Gen AI, of course, in technology. Now 30,000 of our technologists, engineers are enabled with Gen AI. The speed at which we're able to patch for, say, code weaknesses or kind of vulnerabilities is 10 times faster already now than it was the case last year. 10 times. And we're not talking
in 12 months.
In 12 months. We're not talking some productivity in 5 years. We're talking productivity already here. This is hugely transformational. So you can imagine how important it is. Now I go back to the first part of your question, Francine, is what are the skills that are needed for banks? I would say there is no one particular skill that's going to be critical, but it is going to be the ability to learn. Because you can come in a bank coming from an engineering background, from a technology background, from an accounting background. But once you're in the bank, your career, the customer's expectation are such that you're going to have to continuously learn. And if you think you know it all, then there is no place for those, in an evolving landscape. Today, the most important learning capability is how to best embrace Gen AI and innovation in general.
Are you surprised that these, tariffs and trade barriers that have been erected really in 2025 haven't had that much of a material impact?
So a couple of things here, Francine, that are interesting. The first one is tariff in and of themselves aren't a new feature of global trade. They've always was forms of trade. What was more new in 2025 is the speed at which both tariffs have been erected, but also deals have been negotiated to reduce tariffs or remove tariffs. So that was kind of the new feature. What's also important to note is that, yes, trade found its way, and we've seen trade patterns between Asia and the Middle East, or within Asia, or to some extent also between Asia and Europe, that have outgrown some of the corridors that have taken, that have been slower in terms of trade growth, or that have taken a kind of setback in terms of trade growth. What's most important with these reconfiguration of trade patterns is that, based on our internal research, we believe the kind of addition to GDP that these new trade patterns within Asia will bring to Asia will 3 times more than offset the loss of GDP that will be due to the reduction of trade with the US. So there is clearly value creation when we see Asia buying Asia, and these trade patterns and these trade corridors grow, because they're driving not only trade, but they're driving FDI, they're driving employment, they're driving domestic growth as much as it is trade growth.
Xauusd, I mean, this year, the next couple of years seems to be much more complicated because of geopolitics. You have this massive fight between the US and China, Europe somewhere in the middle, the UK has to find its footing. How difficult is it to navigate geopolitics as HSBC CEO?
So look, there is always a guiding North Star in managing international kind of relations, is what do our customers need from us? Because at the end of the day, whatever we're doing it because we have customers asking us to help them with or to deliver it for them, right? So as long as you believe on this planet, we will have loads and loads and loads and loads of international customers who are looking for supply chains around the planet, who are looking for resilience in their supply chains around the planet, who are also looking for consumer markets for their product and services around the planet to scale their capabilities, then HSBC has a critical role to play.
All right, rapid fire. Your top tips for holding highly effective meetings.
Make decisions. A poor decision is always better than no decision, because you can always change a poor decision and align it and adapt it. No decision leads to paralysis.
How do you overcome self-doubt or imposter syndrome?
Always go to first principles. What is your mission, and is what you're doing aligned to your mission? There are various leadership principles I live by. An important one is great leaders build better leaders. Am I on that journey? And do I have great leaders around me that I'm helping build?
What honest advice do you try to impart someone you identify with having great potential?
Enjoy it. You can't be too worked out in knots around things. It's very important to always step back, a deep breath, and just do it the way that you feel you're enjoying it, because you'll be much more impactful.
I love that. Have fun along the way, right? Xauusd, thank you so much for your time.
Thank you very much, Francine. Thank you. Thank you. Bye-bye.
A cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. Senior U.S. officials say the U.S. and Iran are closing in on a deal that would reopen the Strait of Hormuz. Secretary of State Marco Rubio spoke to reporters in New Delhi.
We're still a work in progress. As I said, we thought we might have some news last night. Maybe today. I wouldn't read too much into it. It takes a little while to hear back. So we have what I think is a pretty solid thing on the table.
And Huawei has developed a new pathway to catch up with industry leader TSMC in making advanced semiconductors. Huawei will start making 1.4 nanometer chips by 2031, with TSMC will begin the mass production the same in 2028, shortening the almost 5-year gap between the two chip makers. Huawei's semiconductor chief said the chips coming this fall will be the first to adopt its logic folding architecture, which boosts performance by increasing the number of transistors it carries. Let's get a check-in on the markets this morning. There's really one story dominating the agenda and dominating markets across all asset classes and across the world, and that is the prospect of a potential peace deal between the United States and Iran. The market's really taking that news to heart. You can see that across the equity complex here in Europe. The Euro Stoxx 600 up by 0.8%. The DAX over in Germany up by 1.3%. The CAC 40 over in France up by 1.5%. And those S&P futures gaining almost 1%, awaiting that cash open tomorrow morning, likely to get another record in the United States for that equity market, both on the S&P and the NASDAQ. And switching up the board, looking at some of the other asset classes moving this morning, you have the euro versus the dollar gaining some traction this morning. The dollar selling off more broadly, but the euro there up about 0.3%. And then the rate story over in Germany. This is going to get very interesting for the ECB on June 11th, their next policy meeting. Does this diminish the chance of them potentially hiking rates? If you ask the markets, the chances of a rate hike for the ECB has gone down materially at about 77%. When you went into the market on Friday, that was at about 88%. And so the consequence of that, you're seeing across the rates complex within Europe, Germany down by about 8 basis points, but it's really the same story across France, Italy, and all the other major bond markets here in Europe. And Brent crude, as you would expect, on the optimism of a possible deal, breaking below $100 a barrel, down by $5.8, about 5.6%, and gold spot catching a light bid this morning. Well, more than a light bid, about 1.3% higher this morning. We'll bring you some more updates in about 30 minutes time. And until then, we'll send you back to tape programming over in the United States. I'm Oliver Crook, and this is Bloomberg.
Somebody in the organization made a call, and I respect that. I mean, are we going to get these calls right every day? There's 100 calls we've made to exit stuff that actually didn't end up being successful. Again, do you regret it, or do you deal with what you can control, which is what do we have ahead of us? And I am much more of a philosophy. Focus on what you can control. Makes life much easier, because then you can actually look forward rather than keep looking back.
I'm Francine Lacroix, and this is Leaders, the podcast that explores what drives the world's most influential people. This week's episode is Wael Sawan, the chief executive of Shell. That's Europe's largest oil company. We spoke at the end of last year, before the U.S. attack on Venezuela and its capture of President Maduro, and the more recent U.S.-Israel war with Iran. And while recent events have really upended the global energy industry, Xauusd's time at Shell has drawn praise, especially for his focus on controlling costs. Now, since taking over in early 2023, Shell has outperformed its big oil rivals. And as a leader in a challenging and increasingly volatile landscape, I was keen to hear about the moment Xauusd knew he was being considered for Shell's top job, his controversial choice to pivot away from renewables, and his advice on how to be decisive about investment. Well, thank you so much for joining us.
Thank you very much, Francine. Great to be here.
What kind of leader are you?
Look, I've learned, I think, through firstly my father to start with people. I remember when he retired, he worked for 3M. He sort of said at the time, business results are important, but when you leave, the number of Christmas hampers you get after you have retired from people whose lives you've influenced will be what actually counts. And so I've always believed you have to start with people.
You're an oil executive, and I couldn't figure out whether you're even maybe, you get more heat than bankers. Does that bother you?
No, it doesn't, because I think the issues we're trying to sort of work around are really tough issues. And positions of leadership demand a burden of responsibility. I don't think that should be unexpected. What I need to be able to do is to make sure that my compass is clear. And so I spend quite a bit of time in introspection and reflection. And then it's how to mobilize our organization to deliver.
What's that introspection look like?
It starts with actually recognizing that the world around us is moving at an incredibly fast pace, whether it's geopolitical changes that we see at the moment, technological changes with AI, climate, and therefore the world that we have come from, in particular a company like ours, very strong engineering culture in general, we need to move from an all-knowing culture to an all-learning culture because the world is just unpredictable. It's uncertain. It's not linear.
As an engineer, does it mean you can take emotion out of it when you problem solve?
I think you can, but I don't think that's healthy. I think at the heart of it, and it's one of my own developments, when I get too strategic about things, good counsel from colleagues around me has been, great, you're in head mode, make sure that you also touch into heart mode. Because I don't think you want to divorce head and heart, even when you're making some of these tough decisions.
Well, when did you first start being like that? Do you remember the first memory as a child that you already wanted to think with mind and heart?
I was the captain of our high school soccer team. And I remember the burden of responsibility at that time. We lost the tournament that we were competing for, and the challenge of lifting up a group of around 15, 16 people at the time, while figuring out how I lift my own self up, I think was one of my first experiences with leadership, but it was addictive. It was great, and it was depressing, and it was disappointing, but it was all these emotions at the same time, and it was a great opportunity then as I grew in my life, career. I had more and more opportunities to test that. I remember once being given my first leadership opportunity at Shell. And this poor individual who was reporting into me, I tried to apply all of the potential leadership learnings on this one guy.
That you learned during your MBA?
That I learned during my MBA, that I'd read a lot about. And this poor individual had to sort of succumb to all of the leadership 101.
Yeah. What does that look like?
How do I make sure that I am providing him his development plan? How do I intervene to support him on a daily basis? How do I coach?
Did he say, well, I'm okay? Or
super
was he
gentle, and he never pushed back. But as I reflected, as I sort of grew in my role, I'm like, this poor individual must have just been cursing the moment that he got me as a leader.
What did you learn about yourself, actually, in that first leadership role?
I think I learned that I have natural biases, right? So I love to be out with people. I'm an extrovert by nature. But put me into a room on strategic issues and I can focus a lot more on that head than the heart. I also learned around just the way I drive performance in an organization, finding the right balance of when do I reach in and push hard or when do I step back and create space? When am I more the advocate, the supporter, and when am I more the individual who is actually catalyzing a change?
But, well, I mean, Shell is one of the biggest energy companies in the world. So when do you ever step back and give space?
I'd say what I've seen in my last 3 years in the job is I've gone through phases. The early phase was all about really step in and stabilize the company, really get it into the performance discipline that I was hoping we can get to. A leaner, fitter, much more competitive company. We're very clear on the strategy we want to implement. I can now step back more and more and actually do have time to reflect. What are the moves we want to make? Go out, connect with people, be inspired by different ideas from the ones we have internally. I'm finding more and more of that space, but that's partly because we have done a lot of the heavy lifting to be able to get clear on where we want to go, and we've put some terrific people in place to be able to lead their respective businesses and functions.
So is the secret to a good manager or being a good leader being able to adapt to the situation? So know when to push and know when to reflect.
Absolutely. I saw that early in my career. I had just successfully concluded a leadership role in Qatar at the time, and I assumed that leadership posture, style was going to serve me in a different role when I was going to New Orleans. And I was absolutely wrong. I needed to very quickly understand and diagnose what the challenges were, what the opportunities were, what the strength of this team was, and to be able to adapt my style to be able to help them unlock their full potential.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
It's normal to have an inkling you're being considered for a new job, but it's hard to be sure. It was in Qatar, when he held significant leadership roles, that Xauusd realized he might be in the running for the top job at Shell. I wanted to hear about this moment and how he transitioned from the candidate to chief executive. When you look at your career, how much of a, game changer was that big Qatar job?
It was a huge game changer. Right, a huge game changer.
Did you understand at the time that they were maybe testing you to then become chief executive?
Of course, it was the sort of job that you figured you were on a good track in Shell. I'll be honest with you, it took me a while to recognize and to convince myself that I was in line one day to become the CEO, because, you're trying to do the best that you can in the jobs that you have. But I can tell you, almost every single job that I had been given in Shell, I thought there were others who were more qualified than I was. And so it created that knot in my stomach going into the job. I need to work harder. I need to do better. And so Qatar was one of those moments for me. It was a difficult role because the 2-3 weeks after I stepped into a role, we had the safety incident where we lost 2 of our colleagues. And I struggled as a leader because it was under my watch that we had lost those 2 people. 2 colleagues whose families I knew, and it catalyzed us into a different place. It catalyzed us into a space where as a group we had to figure out, how do we heal, and then how do we, reach to the stars?
So when you have a new job, be it at Qatar or then CEO, how do you problem solve? How do you, first of all, spend a bit of time understanding what you need to fix and then go about fixing it?
I spend a lot of time, once I know I'm in a new job, just meeting with folks both internally and externally to be able to just listen to perspectives. Where are the value pools? How is Shell doing? What can we do better? What are the benchmarks telling us? I then like to move into a space of actually creating clarity of direction, because I find an organization is not at its best without that clarity. And so after that, for me, is the next step, which is really setting that direction. We've done that in my role as CEO, but more and more we linked it to the purpose of what we want to do, to become that leading integrated energy company.
I mean, oil companies for a lot of moment were also kind of integral to the energy transition, right? A lot was put on oil companies to make sure that you did your part to become cleaner and greener. Is that fair?
I think it's absolutely fair that we, along with the multiple other stakeholders, have a role to play in the energy transition. So customers have a big role to play, governments have a big role to play, energy producers like ourselves have a big role to play. And what we have found as a company is we have to play to our competitive strengths. So yes, we're very strong in oil, we're very strong in gas, we're very strong in trading, we're very strong in marketing. So how do we take that nexus of strengths that we have and actually contribute to an energy transition that we know is not going to be linear, that we know is going to be complex? And how do we become a stabilizing factor for our customers as they try to navigate it?
You were speaking very plainly 3 years ago, right, when you became chief executive, when some of your rivals or competitors were trying to say, like, look, we're going to be quite good. Actually, we're almost a renewables company. Like, were you just more honest than some of your competitors?
I think for quite some time, what we had been trying to do is maybe speak to multiple stakeholders. And unfortunately, that can come across as almost being all things to all people. I felt it was really important to, one, build our own beliefs around the energy system, really get clear what our role was going to be, and then just say it for what it was, recognizing that not everyone was going to agree with it, that we're always going to have also a small group of avid supporters, and that what was important was for those 80%, 70% in the middle to hear our convictions, and then most importantly, to see us follow through on those convictions. And so what we wanted to do was to position ourselves as a player that is supporting the energy of today while looking forward. And it wasn't about choosing sides. It was about finding the role that we can uniquely play to be able to address energy security, energy affordability, and energy sustainability. And people, I think some would prefer it's either this or that. And we felt, no, we are building a company that we want to be the best performing, best returning company, not just today, but for decades to come. And therefore, it's incumbent upon us to be able to look at not just the energy system of today, but to help shape the energy system of the future as well.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Big decisions have shaped Xauusd's time at Shell. Some before he became chief executive, others on his watch. There's a sale of the Permian Basin assets for $9.5 billion during COVID, which was seen as a coup for the buyer, ConocoPhillips, and the earlier exit from Guyana before it became one of the world's hottest frontier oil plays. Different moments, different leadership, but both raising big questions about long-term value. In 2019, Shell decides to sell your basically Permian assets. Was that a mistake?
No, it wasn't a mistake. At the time, what we were trying to do, it was a very different context. We had a significant amount of debt. We needed to be able to actually pay down some of that debt to become a much healthier company. We had tried actually before the sale of the Permian to look at buying and growing our Permian position. We competed in a couple of different processes and were not successful. So we were getting to the point where our position was just not large enough, not material enough to be able to win. And so what we ended up doing is we sold indeed the Permian, and we used some of those funds to be able to pay down debt and continue to strengthen the balance sheet. Today, we enjoy one of the strongest balance sheets in the sector as a result of many of the choices that we have been making over the recent years.
It could have been a great asset. So is your philosophy no regrets, or do you sometimes think about what could have been?
Oh, we always look back. I mean, every single year I take to my board what we call a post-investment review. It's all the good, the bad, and the ugly of where we have invested, the choices we have made, because it's humbling to be able to sort of look back with the benefit of hindsight and say, you know, what went wrong, what went right. Sometimes it's execution. Sometimes it's our view of the strategic lens that we looked at the world through. But it's important to continue to look at that, not to regret it, but much more to learn from it as we look to then build the muscle for the future.
Yeah, talking about Guyana, it could have been one of the most important assets, right, for Shell. Regrets there?
Look, again, I mean, we empower people in the organization to be able to meet budgetary requirements. We just had a couple of wells that hadn't succeeded. Somebody in the organization made a call. And I respect that. I mean, are we going to get these calls right every day? There's 100 calls we've made to exit stuff that actually didn't end up being successful. Again, do you regret it or do you deal with what you can control, which is what do we have ahead of us? And I am much more of a philosophy, focus on what you can control. Makes life much easier because then you can actually look forward rather than keep looking back.
Okay, so what can you control now?
What you can control is becoming that leaner, fitter, most competitive company. Make sure that you continue to build resilience. Get that balance sheet in a very strong position, get your businesses delivering cash, and making sure that you are ready because the world around us is uncertain. We need to be able to actually have the strength to go through the cycles and to generate value and grow through those cycles. That's what we can control.
But, well, is bigger better? I know, again, rumors of a combination between Shell and BP keep on swirling around, and they've been doing so for years. Conceptually, would something as big as that make sense?
I don't start from a position that bigger is better. Undoubtedly, there are parts of our business where scale matters, right? Because scale allows you to be able to be competitive. You can spread your resources in some of the areas where you can unlock a bit more value. But scale for the sake of scale is mistaken. Some of the largest M&A deals are the least successful M&A deals because they are massively complex. So I start more from a place of focus on what your strengths are. If you're ever going to do M&A, firstly, set a very high bar. Make sure that you can create value from it. And then if you transact, put all of your efforts into making sure that it delivers value. But do it for the right reasons. Don't do it because of FOMO. Don't do it because you want to be bigger. Do it because it creates value for your shareholders longer term.
We've seen loads of M&A in banking actually fail because the DNA of the culture was different, because the teams didn't work together, be it risk-taking or something like that. Is it the same for oil companies?
Absolutely. I think DNA does matter. Culture does matter. And again, it depends on the scale of the aggregation of the companies. But if it's two big companies coming together, I would say culture is one of the biggest things you need to be able to look at.
What do you say the culture at Shell is like?
So I think our strength has always been the nature of the company is high values. That's one of the reasons I joined Shell. It's a company that focuses on respect, on integrity, but we're trying to evolve the culture further. We want to have more edge in our performance focus. We want to look at leveraging more the different parts of Shell to unlock value. We call it One Shell, how we are able to truly come together as an organization. So there are elements that play into that. I'd say at the heart of the cultural shift that we're trying to make is the point I made earlier around going from an all-knower to an all-learner. Because of our engineering culture, we like to solve for discrete outcomes. And that's what we built, and it's been successful for us for decades, for over a century. And as we go into the energy transition, as we go into the world that we're going into, also with the advent of AI and how you leverage AI and what we do with some of the challenges we see on the geopolitical level, we have an opportunity to be able to have the humility to actually step back and reflect. How do we change? How do we challenge the paradigms we have had in the past? And how do we come up with new ways of being able to steward the company?
But if you look at the numbers of how much energy we need also to just face the data centers and AI usage, I mean, the numbers are so big, it's almost difficult to get your head around it. Do you have to be a predictor of that? Or do you have to foresee the future? Or do you need to just react in a way that's in your control?
I think you have to have a clear view of the energy system. And I would agree with you, Francine. I think at the end of the day, we see that primary energy demand is going to continue to grow for quite some time.
By a lot.
By a lot, right? It is, and it's been happening. I mean, people talk about energy transition. Of course, what we have been seeing is energy addition. We are at peak oil demand, peak coal demand, peak gas demand, peak renewables demand, peak bio demand. The world is trying to get its hands on all forms of energy for many of the reasons that you talked about. So while we cannot predict the future, what we can do is sort of really make some very clear deterministic bets on the future. One is gas for us, for example. You know, we see gas as being a stabilizing force in energy systems that continue to transform. That allows us to be able to say, okay, we are one of the biggest, we are the largest international player in LNG, then make sure that you continue to play that with lower and lower methane emissions, but really be there to give our customers that versatile, reliable fuel that they seek.
Well, what's your North Star? So if you look at your day, how much is it meetings, you know, or things that you need to deal with that you could have, or that you want to preempt, and how much of it is actually firefighting?
The ratio, I would say, has swung more and more to actually controlling my own agenda. When you start, you're still learning, you're sort of responding to different stimuli, and now I've had the opportunity to actually shape that. My coach has sort of told me the most important thing you should be doing is to be purposeful. By the way, some of that day is spent having dinner with the kids and my wife. Be purposeful and be present in that moment. And other parts of the day are about self, exercise, gym, or, of course, at work, really be purposeful. In this meeting, are we trying to open up people's minds to what's possible? In that meeting, are we trying to address a particular challenge that needs a decisiveness in the moment? Really just being choiceful and purposeful in the way that one conducts himself. I think if I can get to that level of sophistication, then I will feel that the day that I'm spending is worth every minute that I'm spending.
Does that have to be in everything you do? So as while the dad and while the CEO?
I think in positions like this, it is even more important to be conscious of that purposefulness, because it is so easy. You can come back home and your mind's still distracted and thinking about work and trying to be there having dinner, but really sort of your mind's not there. You have to be able to actually create the space and the time to be there, to be present. And it's one of the things I continue to work on as a leader.
Do your kids talk about climate change? Do they push back?
They do. Actually, it's more from a position of curiosity. They hear different perspectives and they say, I think I trust you. I'm going to get your perspective on it. So we end up talking about it. We talk about politics. We talk about life. We talk about leadership. And they've gotten to an age now where they have a lot more curiosity, where they're studying about some of these things. And sometimes the studies sort of end up giving a singular perspective. They're keen to be able to understand the broader perspectives.
Do you think Shell will be radically different in 5 years or significantly different?
I think the pace at which the energy system is changing means that we will need to continue to evolve. I don't think one should expect a wholesale change of what we do today. I think hydrocarbons will continue to be a big part of what our business is. How we prosecute our business, I think, will change significantly. In particular, we see AI just starting to influence every part of how we work. We have evolved as a company over 135 years, and so it's not unexpected to see us evolve in the next 5 years and in the next 20 years, and hopefully we'll be here for at least another 100 plus.
What do you want your legacy to be?
When I was recruited into this position in the final interview with the board, I said one of the biggest things I hope to be able to leave behind whenever I move on is an organization that is better than what I left, what I inherited. And the biggest thing for me has been the people. I do think being able to develop the next cadre of leaders in Shell is one of the things that both excites me the most and I feel most urgently I need to be able to achieve. And the reason I say that, what I love about this company is it is an institution. We are all replaceable. That the institution and its values outlive you.
How difficult is it to groom your possible replacement?
I'm spoiled in a company like Shell given the talent base we have. We have brilliant people. So for us, we have very, very deep succession planning. We have very deep talent programs. So it allows us to know some of our emerging talent in year 5 of their tenure, even if they're in their early 30s, to be able to allow us to see who might one day get to the top table and what are the experiences we need to give them to be able to get there and what are the leadership opportunities we need to expose them to. The biggest thing you can do for an institution like this is make sure that you make it stronger when you leave it. If I can do that in my tenure, I'll be a very happy man.
Well, how do you recharge?
Exercise. Do gym when I get back from work, and I try to make it consistent.
Is it difficult to switch off?
Not difficult to switch off. I find myself in the right headspace when I need to switch off, and I force myself to do so. Good sleep is key.
If you had to write a book today, what would it be on?
Leadership. I think it would be on just learnings, failings, challenges, and what I took away from it.
Well, thank you so much for your time today.
Pleasure. Thank you very much for having me, Francine.
It flew by. That was 30 minutes.
Perfect.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. Senior U.S. officials say the United States and Iran are closing in on a deal that would reopen the Strait of Hormuz. Secretary of State Marco Rubio spoke to reporters in New Delhi.
We're still a work in progress. As I said, we thought we might have some news last night. Maybe today. I wouldn't read too much into it. It takes a little while to hear back. So we have what I think is a pretty solid thing on the table.
And shares of Delivery Hero rising today after Uber's $11.6 billion takeover offer. This as investors bet that a higher price will be needed to clinch a deal. The stock touched its highest level since November 2024 amid growing expectations of a sweetened bid. A quick check across markets this morning. Really, you're seeing one trade be represented, and that is the potential of a deal between the United States and Iran catching a bid across European equity markets. There you see it on the Euro Stoxx 600 up about 0.8%. The DAX up 1.4%. The CAC 40 in France up 1.5%. NASDAQ futures blazing ahead 1.4%, likely an all-time record high at the open again tomorrow once we get a resumption of cash trading. Looking across some of the other asset classes across the world, the dollar selling off ever so slightly. Here you see euro dollar bid to the tune of about 1/3%. Again, the rate story in Europe very interesting here now. Whether or not the ECB will move in June, if you do get a deal between the United States and Iran, very much an open question. That is driving yields down across the board here in Europe. Brent crude, of course, selling off also this morning. We'll send you back to tape programming and bring you another live update in just under 30 minutes. This is Bloomberg.
Working from home is career suicide. And we only talk about the upside of working from home. And here we go. We know that people don't really want to hear this. Think about what's happening in the world. Declining birth rates, declining marriage rates, and loneliness epidemic. And we think that none of that is linked to the number of people that don't see people because they're doing Zoom calls from their living room. It's so crazy to not make that correlation.
I'm Francine Lacroix, and this is Leaders, the podcast that explores what drives the world's most influential people. This week, I'm speaking to Emma Grede. She's the chief executive and co-founder of Good American and founding partner of Skims, the shapewear and loungewear brand, which was valued at $5 billion in November 2025. Now, the last 10 years have seen her star rise, a lot of it down to her successful partnerships with a celebrity family named the Kardashians. But now may be a pivotal time for her, and I wanted to talk to her about one of the best and worst days of her career, how she leads with radical honesty, and why, as a self-styled behind-the-scenes woman, she's now chosen to step out into the limelight. Emma Grede, thank you so much for joining us. It's exciting to speak to you again.
It's so lovely to see you again.
Talk to me about The Good American. The day you launched was seen as one of the biggest successes, almost of all times, in the denim world. 1 million, right, in sales. But then you write in your book that actually it was quite stressful and didn't go to plan.
You know what? That's an understatement, because it's really interesting when something from the outside looks so perfect. And in one way, it was a total dream. You know, it was the first time that I'd done a business in apparel. And for all intents and purposes, it was like this beautiful, amazing thing that went so well, except from the inside where, you know, I had no inventory. We'd had this beautiful dream first $1 million day that kind of went down in history. But behind the scenes, I was scrambling. I had like a wait list kind of coming out of my ear holes and no way to satisfy the demand. But more than that, I had like this kind of doubt permeating through the company, on the board with my shareholders, that perhaps because of that oversight that I wasn't the right person to run the company. And actually looking back, it's kind of interesting that I never felt any fear around that moment. I just kind of looked at everyone and was like, leave me alone, I'm going to figure it out. But
Never
actually,
any fear. There was not a moment where you thought, actually, I need to take a step back, or I need to convince the board, or...
No, and it's so interesting because so many people talk to me about, you know, imposter syndrome and being a first-time founder. I never had any of that. I always think, like, if not me, then who? You know, I in my head, it was my idea and I brought it to fruition and I was going to figure out any of the problems. And so much of being an entrepreneur is about figuring it out. You never have the answers. And I think if you have the answers, you're probably not moving fast enough.
But the board told you off.
I got a bit of a telling off. Yeah, well, I wouldn't say a telling off. There were just some dismissive tones, like, you know, it was like I was a genius at 9 a.m. and by noon, it was like, perhaps you're not, you know, best suited for this role. And I just completely dismissed that.
So how did you regroup?
In a really tumultuous like way. I think, you know, I did what I know to do, which is when you don't know something, you ask somebody who does. And so I started calling around. I tried to like information gather. I was calling competitors, I was calling retailers, I was like literally visiting factories. And so in a way you could literally get on the ground and say like, how can I change this? How can you move this? But the simple fact was the fabric wasn't available because I hadn't had the foresight to get out in front of the calendar and know what I was, you know, up against. But a new brand is a new brand. There was no data, there was no history, there was nothing telling me that this was going to be that successful. And so would I have done anything different? No, I don't think so.
What did you learn about yourself? Because a lot of chief executives will say, look, it's only by learning and failing that finally you have the posture to say like, look, I got this.
Yeah.
But you think I got this right from the start.
I really did. And perhaps that was naivety, but I knew I'd figure it out. In my head, I just thought this is just another problem. And my life is a series of problems as a leader and as somebody who starts companies and builds things from scratch.
Did you tell the employees or did you celebrate with them and figure it out by yourself?
I had no choice. The great thing about Good American at the start is that I'd chosen that initial team really well. So I had veterans in my business. The person, and thank God she still works with me now, but in a different company, but the woman that was really in charge of product had been in the denim space for 20 years. And the guy that ran all design really was, you know, like so ingratiated in the denim community in LA that we were able to literally knock on doors and ask favors. And so I thankfully had surrounded myself with people who knew better and could help me open doors.
You talk a lot about, you know, giving employees honest feedback. Is that radical honesty? How do you describe it?
It is radical honesty, but that's also so much about who I am. And so I've always thought to myself, I can just be honest with myself. I don't need to walk around with some, you know, guilt on my shoulder and carrying stuff that doesn't serve me. So for me, it's just about honesty, take the learning, move on.
What does that look like when you talk to employees?
It looks very straightforward. Here's the thing. I don't think anybody in my organisations ever wonder what I'm thinking. Nobody's like, oh, I'm trying to figure out how Emma's feeling. It's like, I am really firm and really fair. I have very, very, very high expectations for myself and for everybody around me. I give very, very clear feedback. And my job as founder and as a CEO is to have the vision, right? But it's to communicate that vision downwards. And so I'm in a constant conversation with everyone around me. I think I'm super repetitive. I say the same three things over and over and over again. And everybody in the organization should be able to know what our priorities are and know what we're doing. And so I think I'm a little bit of a broken record, but I think that there's an element of consistency that comes with that. And I'm bloody consistent.
And you've talked before about needing different people around you to go from 10 million to 100 million to 5 billion.
Oh, don't you just? It's not the same people. And, you know, I kind of raised myself in business having an enterprise mentality. I learned that very, very on. I'm not here to do people favors. Business is business, and I do what's best for the company every single day. And often that is what's best for the individual. Nobody wants to be kept in a role that they're not best suited to, because that never works out for the individual or for the organization. So I've learned over time that, you know, what is good for the company is ultimately good for everybody.
But what is that, ruthlessness?
I don't know that it's ruthlessness. I think that it is just being able to delineate what is right at the time. And, you know, here's the thing. I think specifically as a female leader, you're judged on, you know, how empathetic are you? And so I think the way that we work, and the reason that I think directness is always best, we all know where we stand all the time. I'm not waiting for an assessment moment or a 6-month mark or some kind of like formal review. If you're failing, you probably know you're failing because we've probably spoken about it. It's not like a bolt out of the blue.
So how do you hire? Do you hire people that you think can take the heat in the kitchen, or do you expect everyone to just, you know, take it?
Well, I hire differently for different stages of the business. But I think in the beginning, you know, you want generalists. You want people that are going to have a, you know, I'll do that, hand up mentality, whatever it is. I think as businesses mature, you're looking for more, you know, category and subject and departmental expertise, and typically hiring for an enormous amount of experience. But for me, what I place so much value on is flexibility. You have to be willing to look and take your experience and do things a little bit differently. So I'm always trying to hire for people that are seriously experienced, but seriously flexible.
Is there a concern with loyalty? I mean, are employees still loyal if they feel that you can cut them off at any point?
I mean, I don't know about cutting them off at any point. And I think that loyalty is something that you earn. You know, there's a trust in a business, and it really is about people learning to trust that what you say is what you mean and is what happens. And when you do that, you can be trusted regardless.
Do you think a lot about incentives?
Yeah, I mean, I think that is just the expectation. Like, incentives have to be built in for the best people. And that happens at all levels of the organization. But everybody has to understand how the incentives come to be, right? The company has to perform well in order for the incentives to be, you know, created, but then for them to be paid out and to make sense.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg. You can't mention Emma Green without the Kardashians. In a way, they were her biggest supporters. She reportedly met matriarch Kris Jenner first and pitched teaming up with Khloe Kardashian for Good American. But was there actually a moment, a meeting of minds, and how did she convince some of the most famous people in the world to go into business with her? Can you talk to me about the pitch when you pitched Good American to the Kardashians?
There was never such a pitch idea. You know, specifically with Good American, there was an idea that I had, and I really felt that the partnership would, you know, make this thing just accelerate. But it never is, you know, how people kind of see it in the movies. There was a relationship that existed and a moment in time, and the best things and the best businesses always work when what's happening in the culture chimes with whatever you're doing. And I think at that moment, when you go go back 9 years ago, the idea of body positivity and what it meant to do real inclusivity in fashion just wasn't what it was today. And so I think that whenever you're starting something, it's like this melting pot and a smorgasbord of small decisions and the right thing in the culture and the right moment in time and you being the right person, and some element of magic has to happen. But there's never like this like bingo moment where everyone goes, yeah, let's go.
Don't you have to, I mean, you had to sell your idea, right? At some point.
Yeah, but
they
you
had
know,
to say,
like
yes,
you never
we're in.
need to sell an idea that is like that good, you know? It's like there's an idea and then there are people that decide to jump on board. But, you know, again, I think it feels more like a fantasy to be like there's this moment of sell and this moment of yes, because the best partnerships, they happen over time and they come together because everybody has something to bring to the table. And I think that was one of those magical moments.
A lot of people have ideas, but then they don't really come to fruition. I
Well,
mean, it's
a lot
difficult
of
to get it
people
made.
just, they have, you know, things that they want to do in their head, and an idea can live on a piece of paper or on your desktop for the longest time, but you've got to get out. The hardest thing is to just get out of the gate.
But what's holding people back? And I do see that a lot, actually. People are either too afraid or say they don't know where to start or they don't have the capital.
You know, I don't come from a background where I had either the capital or the network or like the educational background or any of those things. I just tried a lot of stuff and eventually one of those things happened to work out. And at some point, you've just got to take whatever it is that you have and try. And again, I think that we're in such a time where there's this idea that everything has to be like $1 billion brand, everything has to be a unicorn.
But you've managed to do everything at scale. Right, so it's smart.
Yeah, so, I mean, everything that you know about.
Okay, what are the failures?
There's a ton of failures. There's a ton of things that I've done that didn't work. And when I think about my early businesses, I'd opened offices that didn't quite work out. I have, you know, grown companies and then had to downsize them. And those things are really painful. Right now, we only show the glossy side, the amazing things, the great headlines, the stuff we want to put on our Instagram. And the reality is anyone who is an entrepreneur that's done multiple things will have failed. And you have to get comfortable with this idea of not everything working out. It's not always that you did something wrong, so that this thing in this time, this situation didn't work for a myriad of reasons. So long as you figure out what are those reasons and what did I learn from it and what will I do different next time, then that has to be left behind. And I think that if you look around in the culture, that is way harder for women than it is for men, because women are held to an entirely different standard when they start things and they fail. And yet we have men that fail over and over again and close it down and go out and race the next day, and nobody mentions anything about it.
So once you have a failure, do you do a post-mortem to see what went wrong? Do you? With the whole team?
I tell you.
So it's like spreadsheets.
Absolutely. And you really have to understand, well, what did you do, right? Because I think it's easy to point to the market and conditions. It's easy to look at all of the things that were outside of your control, but often there's a pattern in these things, like that you are a huge part of. And so I really try to, you know, and I hate to go woo-woo, but you kind of have to go inside. You have to understand, like, what is it that I miss and what is it that I didn't see, and how can I change that for the next thing?
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
For a long time, Emma Green has been the brains behind growing other people's brands. But over the last few years, she's been making a visible effort to be front and center. Whether it's launching a podcast, high-profile TV appearances, or now her debut book, Start With Yourself, this new chapter appears firmly focused on building her own brand. But I wanted to know why now and what next. So in the past, you used to say you were a behind-the-scenes woman.
Yeah.
What's changed?
You know, I still feel like a behind-the-scenes woman. I still go into the office every single day. Well, you know, I'm like behind the scenes in front of the camera. I do a lot of things and wear a few hats. I think what I've realized as I've become more successful is that wherever I go, people ask me the same questions. They always say, you know, how did you do this? And I don't think people are that interested in me. I think they want to understand how they can be successful for themselves. I'm really trying to like lift the lid and demystify what it means to have a successful career and to start a business and to scale a business and what it means to sell or IPO a business, and specifically through the lens of a woman, because I believe that there is social conditioning that actually makes women avoid the exact behaviors that lead to wealth creation, that lead to success, that lead to leadership and opportunity for us.
What do you think actually doesn't serve female leaders? Because it starts from a very young age.
How long have you got?
We have a lot of time.
I need to get these girls like when they're 10, 11, 12, you know, because a lot of it is what we carry. I don't know that the idea of imposter syndrome even exists when we talk about male founders, male entrepreneurs. Why would we be talking about it so frequently for women?
I've heard male entrepreneurs.
You have?
Yeah.
Did any of them say, yes, I had it?
Yes.
Really? Mm-hmm. I've never heard one.
And then they say, look, I looked around the room and I thought, actually, if they can do it, I can do it.
I can do it. But the same sentence said by a woman carries a different weight. And I have seen, certainly in my own career, this notion of imposter syndrome can be planted as a seed, even when it doesn't exist. And that's what I want to stop. I want to stop us stopping ourselves getting out of the gates before we've even given ourselves a chance. Because my experience is that women are excellent at making money in the business. And they are excellent at just thinking about things in a really unique way. And I hire so many women that are brilliant, especially when they come back into the workplace after having children, because their time and the way they think about things and is so much more precious that they get really, really good at how
to done.
Oh, they get
so quickly,
so much done, and they get it done so quickly with a different sense of urgency.
Do you see yourself as a retail mogul?
No.
As a conglomerate. You're all over the internet saying, you're trying to build the next LVMH. Does that feel good?
So fun. I mean, that's such an interesting headline. How flattering. I think that's like Instagram headlines. Oh, it's a good one.
It is a good one. But
it's a goodie.
What are you trying to build?
What's really interesting is that what I set out to do, I've kind of done. I wanted to create businesses that I could be really proud of, and I wanted to be part of businesses that I really enjoyed going in and working in every day. Like, I wake up on a Monday and I'm like, let's go. And that for me is winning, because where I grew up and where I come from, people dreaded work. They went to work to pay their bills, and that is not what I do. I do it, and I do it for a lot less. I mean, I'm glad it comes with what it does. But I'll be honest.
You see big, you dream big.
Yeah, I've always seen big and dream big, but I think that there comes, there's a level of responsibility that comes with that, because I think that, when I look at the landscape, specifically for women of color, I think that talent's fairly evenly distributed, but opportunity isn't. And so when I look at the ability that I have to create opportunity for other people, that feels like a responsibility for me. Not in a like super worthy way, but in a way where it's like, wow, there's a lot of great stuff out there, and I've done really well putting my money into other female founders. So I actually think there's this whole part of what I'm doing that is part lifting the lid, part giving opportunity, part bringing, like a bunch of people into a conversation and into the business climate that might not otherwise be doing it, and really they should.
Are you good at, you seem very good at identifying brands.
I'm really good at spotting things.
Is this, that's a difficult talent, right?
It's a difficult
like
talent.
Magic almost.
And listen, I think there's a part of me that says, well, of course, that sounds easy now because my deal flow is so good. But I was good at it even when it wasn't. I'm good at spotting opportunities. I think like a customer. I am my own customer in so much of what I do. I have a terrific sense a value and what something is worth. If you buy a pair of jeans from me for $149, they're going to be worth like every $149 that you pay for them.
Is the customer of today radically different from the customer of 10 years ago?
Customers are so much more informed, and there are no barriers to what you can get, where you can get it. And brands have more responsibility to their customers than ever before. And that's fine, that's healthy, you know, may the best brands win.
Is it more difficult? It's just harder to sell.
Harder
to sell because of tariffs and moving stuff around.
Well, it's harder, and the media landscape is so much more fragmented. Yeah, I think if you go back to when I started Good American, you could find all of these crazy unlocks, and that shifted into Instagram and shifted into TikTok, and now it's totally fragmented, and we're all like struggling and going, hey, where's our customer coming from? The
social
only thing,
media.
Yes, somewhat social media, but what channels in social media, and where are you spending, and how does that shift and change on a daily basis, dependent on the platform and the vertical even within those channels. So I think there's a lot to consider. The thing that I've learned is that good products will always win. And so what I don't let that side of things keep me up at night. What keeps me up at night is coming up with a new innovation, constantly delighting and pleasing our customers and coming up with things that they don't even know that they need.
Is there a brand that you admire more than others?
Oh my goodness, there's so many brands that I admire. We just spoke about LVMH, but like Louis Vuitton, I always look at that brand because it's so hard to stay that hot all the time. And, even when I think about a brand like Chanel, it's a brand that I have always wanted since I was 10 years old, and I want it even more now. I'm like constantly texting to figure out when I can get this latest collection. Like, when does it hit the store? How do I not miss it? And I really admire brands that have that type of staying power coupled with that type of heat. That's a really, really hard thing to do. And of course, I would say brands in fashion, but I don't know enough about like other spaces. I'm of course enthralled by what's happening in AI at the moment, and I feel like I'm like everybody else. I'm just trying to keep up and trying to make sure I understand and trying to make sure that I'm using everything at my disposal.
Do you think it'll change your business?
It is changing our business
Is
already.
It?
Yeah,
like
undoubtedly.
In terms of hiring or
I think mostly in terms of like how we're planning the business. So when you think about inventory, needs, customer data, the way that AI is able to get into those systems and read quicker than we've ever been able to. I think what's really interesting is how to think about businesses in the age of AI. The way that I look at it is that you have to safeguard everything that requires a human touch, creativity, innovation, design, like all of those things should be done by people that understand other people's needs, and the rest ought to be AI.
Okay, I have rapid fire. You ready?
Born ready.
Working from home, good or bad?
Working from home is career suicide. And we only talk about the upside of working from home. And here we go. We know that people don't really want to hear this. Think about what's happening in the world. Declining birth rates, declining marriage rates, and loneliness epidemic. And we think that none of that is linked to the number of people that don't see people because they're doing Zoom calls from their living room. It's so crazy to not make that correlation. The key to a long and happy life is your close relationships.
Should the unpaid internship be brought back?
Listen, I did a lot of unpaid internships, and I did it while being somebody that didn't have a lot of money, and that was a real struggle for me. It was a huge unlock for me, the ability to go into an organization and get under the hood without having any qualifications or right to really be there. I think that there have to be certain protections on it, but I'd like to lift the lid because there's so much to be learned.
MBA, worth it or waste of money?
Depends how much money you've got. It wasn't my path. Listen, I am a mother of 4, and so the idea that any of my kids would go and do an MBA would be an absolute dream. But would I force it on them? That's an individual decision. And if you can, then do. But if you can't, don't sweat it.
Emma, thank you so much.
Thank you so much. What a joy.
That was so fun.
Thank you.
And it kind of flew by. It's 7:15.
I know. I'm like, what happened?
I'm like,
I was like,
so good.
Pew!
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers, and it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. The United States and Iran are inching closer to a deal that would end the war launched 3 months ago. Senior U.S. officials say Sunday the deal will reopen the Strait of Hormuz, even as Donald Trump insisted he would not rush into an agreement. Iran's semi-official Tasnim news agency said the draft deal could still collapse because the U.S. is blocking several clauses, including Tehran's demand that its assets be unfrozen. And SoftBank plans to raise $1.6 billion through another sale of subordinated bonds aimed mainly at retail investors just 2 months after a similar offering. The move underscores the company's growing funding needs for AI-related investments. In prediction market, Polymarket has been banned in Indonesia, where authorities classified it as online gambling after a wager on the possible early end of President Prabowo Subianto's tenure spread widely on social media. The government said it will not allow any form of online gambling in Indonesia and has intensified a crackdown on online betting since the president took office in October of 2024. And U.S. Secret Service agents fatally shot a man near the White House after he opened fire with a handgun. The Metropolitan Police Department identified the suspect as a 21-year-old from Maryland. A bystander was also shot and sustained a non-life-threatening injury. And now a quick check on the markets. The sort of animating force within the markets this morning is the optimism that we are feeling clearly across the equity market and really across the world of the possible end of the war or some kind of agreement between Iran and the United States. You see that represented on the board there in European stocks. Stock 600 up almost 0.9% this morning. The DAX up about 1.5%. The CAC 40 in France keeps gaining throughout the morning, up 1.6%. And NASDAQ futures 1.4% higher is what we're expecting for the cash open when it returns tomorrow. That would send the NASDAQ to an all-time high. Yet again, we see something very similar on the S&P. If we switch up the board, we will also see the impact on the currency market, where the dollar is being sold off very widely. There you see against the euro gaining 1/3% against the dollar. And the rate story here in Europe, really the bet that the ECB maybe will not move in June, as has been widely anticipated. If you do see a resolution to the war in Iran, that is seeing yields across Europe falling down by about 9 basis points there in Germany. And Brent crude, of course, selling off at about 1.5% lower. And we'll send you back to U.S. tape programming with another live update in just about 30 minutes. I'm Oliver Crook, and this is Bloomberg.
We started a firm basically around what I learned in football and said private equity can be a place of abundance and makes no sense because it should be just transactional. It should be zero-sum game. You get what you get, I get what I get. But great business, the greatest businesses are the ones that have that heart, that feeling, that there might be other ways to make some money. That's fine with you. But to me, that's the way to make money and make it legacy.
There's no one quite like Steve Young. The NFL Hall of Famer who won 3 Super Bowls as a scrambling lefty quarterback is now making moves in private equity. Alex and I caught up with him in his office at HGGC. That's the $10 billion firm he created almost 20 years ago. We talked to him about ownership, risk, and why he thinks the PE business needs a new playbook. All right, so Steve Young, we often start this show by asking people to introduce themselves. How do you introduce yourself these days?
Well, most of everything's at home. I still have one left in high school. My little daughter, Lila, kids in college, kids out of college, trying to get people launched. And so I was like, I would introduce myself as an aspirational dad right now, see if I can, get people launched.
So not 3-time Super Bowl winner, MVP, Hall of Famer, co-founder of a private equity firm, just aspirational dad.
Well, I think if you have, all politics are local, right?
Yeah.
If things are good at home, then things are going to be good everywhere else. And so for me, it was my old mentor, Roger Staubach, who told me when I transitioned, I said, how do you transition? He goes, you run. I go, run where? He goes, run anywhere. Just get away from football because football will never leave you, but you need to leave it.
Wow.
And so I thought that was great advice because it's really true. Football never left me, but you need to leave the thing it's over. And I think that I don't want to drag it around. Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football. And you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the 3rd floor or the lobby. You actually have to start in the basement and humanize yourself and have the humility to start from the ground up, just like you did in the minor leagues in baseball or football. And that's an interesting. I do have a question for you following up on what you just said. When you walk into an investor meeting or a company you're trying to buy, I find that sometimes being an athlete, the greater you are and even the more famous you are, that almost works against you. How have you dealt with that at all?
So it's funny, for the first 15 years of this private equity journey, I tried to avoid it. And I almost, and if it came up, I was fine. But I didn't, I wouldn't, if it didn't come up, I was fine with that too. And I realized over time that I was the one that was overwrought about it. I'm the one that's thinking about it, like no one else. And I think it was an investor, and I'm not going to name the investor, but it was a big investor in one of our funds. And it was a big deal for us to get them in. And we finish. And he says, we're done. And he goes, do you mind, there's one last thing I want to ask you. He's like, yeah. He goes, will you throw me a ball? Can we go out and have a catch? And I was like, I was taken back. Like, yeah. I'm like, yeah, we go have a catch. And that's when I was like, stop. Let's just, I played. It was great. If it's helpful, if it's useful to you in some way, let's talk about it all day long. But if it doesn't come up, let's talk business.
Yeah.
Because that's what's fun.
And so let's talk business. Let's talk about private equity because, as both of you know, I love private equity. I'm fascinated by it. But private equity is not for the faint of heart. I mean, I think you would agree, Alex, that you and I look at this industry together a lot. There are a lot of easier things you could have done.
Yeah.
Why private equity?
I don't know. I'll try to give the quick answer to that. I'd gone to law school while I played. I went to 3 Super Bowls while I was in law school in the wintertime. But it was really around getting ready for the transition. And so because of that, I thought I'd be a lawyer. But then I was asked to be on the board of Power Bar, which at the time was a meal replacement for marathoners out of Berkeley, California. But for me as a single guy, I was like, That's not meal replacement, that's dinner. And so we got famously friends, and he goes, look, join the board. On the board was Warren Hellman and Larry Sonsini, titans of Silicon Valley.
Founder of Hellman and Friedman.
And Larry Sonsini and Wilson Sonsini, the famous law firm. And I had a buddy who had started a business around an algorithm that back in the mid-90s, you could go in and fiddle around with URLs in the internet. And he said, figure out an algorithm that could localize the internet. Before everyone's time here, you remember when it's like you could put in Palo Alto or New York hammer and you'd get a USSR sickle. Like nothing made sense. And so I took it to him, say, look, this is not, and they realized, Steve, you're a businessman, you're not a lawyer. And so that transition, we built a business, and that's where I met Rich Lawson, my longtime partner, was building a business called Found.com.
Wow.
And we did it while I was finishing playing. And that's what started it. And one of our investors was Bain Capital and Bob Gay. And Bob saw what we were doing, and then he sponsored us, but essentially sponsored me and Rich together to start a private equity firm. And that's how it transitioned. And so I started what is now HGGC, fifth fund, and, you know, $10 billion later.
Here you are.
Here we are.
So, Steve, I mean, if you think about 40 years ago, when Henry Kravis and Steve Schwartzman, and you start Blackstone and KKR and Carlyle with David Rubenstein, and so like the big top four, it was a very small industry.
Very small.
If you look 40 years now, you have
6,000
right?
middle market private equity firms.
So the competition is fierce. So when it comes to imposter syndrome, Hall of Famer, 3 Super Bowls, law degree, but now you're asking investors and institutions to invest in you and Rich, first-time fund, former football player. Describe how you felt when you were in this boardroom asking for money.
For early days.
The first days.
You know, it was interesting. We all agreed in 2008 that private equity was broken.
Wow.
I'd seen enough of private equity for 8 years to say, I have that opinion. And then others had been back in the KKR days and early Bain days in late 80s, early 90s, that like the middle market where the people are, Alex, it's like across the table is not some widget. It's you and me, let's work it out. We got a business size that is really around, it's not a spreadsheet jockey kind of process, it's people. And we said, we've lost that. And so in 2008, we started a firm basically around what I learned in football, which Bill Walsh used to say. He wrote a book, my famous Hall of Fame coach, the score takes care of itself. In other words, yeah, we have to return money to you, but that score will take care of itself if we have those fundamental values of partnership and the athleticism to be great partners and use our intellect and our ability and our expertise. And so what I had to do, Alex, you say, as me coming out of a professional career and imposter syndrome, I need to get really smart people around me fast. Because I know it's not, if it's about me, we're in trouble. But the imposter syndrome sticks around.
Yeah.
I mean, I still think about sometimes I feel awkward and a little out of place. And I think that's my own weird insecurities. And I think in a weird way, insecurities drove me as a football player. And in some ways, I think some of the insecurities drive me here. Just be completely authentic about it.
Yeah, of course.
I mean, it's hard to say, because I'd love to tell you I'm the king and get out of my way.
Right.
But I think to be honest about it, the imposter syndrome is something that is around, and I don't know that it's completely gone.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
You may not have an MBA from Harvard, and neither do I, but the MBA you got is 3 Super Bowls. To be in the middle of that huddle in a pressure situation in the Super Bowl with 150 million people watching, you're doing the same thing in a boardroom, right? Sending your message, here's the play, here's our strategy,
and it really is about people.
Mm-hmm.
And if you're not good at that, it does devolve. It will, football is won in relationship. I got to go back to Bill Walsh. He used to stand in front of the team the first day of training camp and say, I don't care what play we call. I don't care what defense we run. We will win because we have shared common experiences together and an element of love for each other.
Mm.
Wow.
Powerful.
And I was like, we all like, what did he just say?
Yeah.
That's insane. And so I go back to, the boardroom, the things that you hit it right on the head. The things that I had viscerally experienced, the stuff that I went through, it's a different, it's not a field, it's not a huddle, but it is the same drama.
Right. I mean, I've gotten to know you pretty well. Like, you have an ability to go pretty deep with people. Where does that come from?
Maybe it's my own vulnerability that I feel to myself. Like, if someone says I suck, I'm kind of like, huh. I wonder. Let me look into that. You know what I mean? And I think that vulnerability makes me interested in what's happening around me. And I think I watch closely when you play. And Alex, I don't know how you'd think about baseball, but football with the field, it's there's 80,000 witnesses. There's a clock. There's a score. There's a play clock that you gotta go. And if you pay attention on the field, the human behavior that happens and to you and everyone else is the truth. You cannot lie. And so to me, I think whatever my vulnerability or my interest in it just got an expert jolt from playing all those years. Like I feel like every human behavior I see in the world today, I see the flaw.
I mean, did you have that experience? I mean, I'm fascinated by this idea of translation. Football's a different game from baseball. What are the things? What are the commonalities for you?
I mean, it's total transparency, right? Because every time you come to the plate, you're sitting in front of Yankee Stadium in front of 50,000 people. And all you got to look is that scoreboard. It's going to tell you what's your batting average, what are RBIs, home runs,
OPS,
everything. So you're either going to get cheered or booed, and it's immediate. And I think one of the advantages Steve and I have being former athletes is we have no problem saying, hey, that's my fault. That's my fault. And we get our butts kicked over and over again. In baseball, if you fail 70% of the time, you go to the Hall of Fame. So you almost have a PhD in failing. The key is that you have a master in getting back up. And I think we were talking a little bit about that earlier. A lot of people in business that all they've done is win, win, win. We're actually perfectly made for business because business is a sport of failure.
I love that because in a way, if I could get all the guys that are out there going through that and learn, it's intuitive, right? You can't get into the pros and not have that happen to you. And if you could just be aware, self-aware as it's intuitive, but you're not necessarily aware of it. And if you could become aware of it and watch it and become it as a talent, you could be easily hireable. Like if you really take it in and you notice it and you pay attention to it, it's portable, 100% portable over into the, another practice, because it's people.
All right, so I want to introduce an on-the-fly segment that I'm going to call Asking for a Friend, because I really am asking for a friend. And this isn't sort of like, ask for me. I'm actually asking for a friend. Steve, asking for a friend. If you were to, say, have just bought a couple basketball teams in the last few years, you're taking on the role as an owner for the first time. You've been an owner of your firm. What's the best advice you could give him?
Fascinating. Treat your position as highly fireable, even though it's not. You get inevitably a little lazy just because I'm safe.
I
could make mistakes and, and screw up. Well, I might get embarrassed. Someone might write a bad article about me, but I'm not at risk. Like I just feel like I want to walk around without the hubris that I own the place.
Wow.
Right? I mean, it's like, and I think people will feel, because you walk around with hubris, you own the place, everyone else is like, you do, so I'll bow, but it doesn't make me feel like I want to go fight.
Wow.
And I think that's super powerful. The other thing is, one of the best things that ever happened to me when I was playing, I wasn't flailing around, I was playing pretty well. Mike Shanahan, Kyle Shanahan, the coach of the 49ers, stays his dad. He was a great coach of the Broncos, and he played coach the 49ers for me. He turned to me one day and he said, I'm a really aggressive play caller. And I think I spend so much time trying to make sure that I don't put you in a bad spot. But you know what? I start to feel like I'm holding you back. So I'm going to flip the script. And instead of holding you back, I'm going to empower you. You take care of me. Instead of me, coach, take care of you, you player, take care of me. I'm going to call as hard and fast as I possibly can. And if if there's a problem, you deal with it.
Wow.
And I remember feeling like this empowerment, this feeling like, I mean, I can still feel it in the back of my neck right now. It's like, let's go do it. Let's do that. And then what came out of it was this acceleration. And so I guess my point is trust, like empower people to run ahead. Not by the side and not from behind, but to go. And I've done this in business and especially in our firm. You're young, you haven't done it before, well, you're about to. And you know what? It might cost us in the short run, but running out and forcing you to kind of do hard things that are ahead of your time, you're going to find out and we're going to find out really fast, and then we'll iterate.
Yeah.
And it doesn't mean that you fail. It's just like, let's iterate, let's get back. And that's how you empower people. You have to empower. That my coach empowered me. That's what it felt like. And then I was like unstoppable. And if you can get a team full of empowered people, you can't stop them.
Thank you for that advice. And that really means a lot to me. And I think it's funny how much alike we think.
No, we talked for a few minutes before. I'm like, we're gonna turn to butter soon. We keep going around the circle.
I just want to take you to dinner and actually keep going because it was so good.
No, but I've loved what I watch you on baseball. I watch you in a lot of interviews and stuff. I know this is rattling around. You're chewing on what I'm chewing on.
Mm-hmm. Mm-hmm.
And that's what I appreciate.
Trying to figure it out every day.